Also getting a bounce review of the tea business welcomed by some investors, but patches of red across the oil stocks. And also some of the dollar earners are just tracking a little bit weaker, AstraZeneca, GSK, for instance. A quick look at what we're seeing across the board for the banks. That just flashes out what we're seeing around coronavirus. Effectively, some of those closures in Hong Kong affecting Standard Chartered and HSBC. And UK retailers, there are big concerns about the strength of the high street. I think investors are closely watching this one. Ocado, M&S, two that have now entwined their fortunes together with an arrangement around the online platform. Those track weaker, but the rest all in the green today. And home builders, as we talk about Brexit, very much in focus around the trade. And we've got a bit of green on the boards for these names. Barrett up about a third, Redrow 0.6%, Taylor Wimpey, Persimmon all gaining this morning. Nanette Hetchler-Federb, the CIO of International Wealth Management and Global Head of Economics and Research at Credit Suisse, has joined John and myself around the set this morning. Thank you for your patience and thank you for joining us. It is Brexit Day today. Just give us a sense of how your clients and how your company has been positioned around Brexit at this point.
I think there is, in some sense, the relief of visibility, at least until the end of the year. It is a transition phase, and not to forget the UK stock market, for example. One way for investors to take perspective on this political event, the UK stock market, for lack of visibility, was one of the cheapest in developed markets. So some of the gains that the market is making today and probably in coming days is reflecting a bit of relief around visibility for a certain time. I think the evaluations seem enticing to clients who are looking for yield in a world that is still really dry of yield, and dividends are quite high. So that's one way to take position, and we are overweight ourselves in our strategy on equities.
John and I were having a fantastic conversation offline before, which we'll share with the audience, about whether you should be waiting to invest in the UK or whether you should pull the trigger and jump in and go for it. Because what we've seen on global stock markets, very swift trade to the upside sometimes, and even the UK market, there's not a lot of headroom between the highs that we've had, about 700 on the FTSE, for instance. So, John, give us a sense about your strategy and just how quickly this market could move if you're not in the trade.
Well, it's interesting because you can have markets moving either because you have an economic rebound and you have higher growth and expected earnings, or you can have a multiple expansion. And last year, there was no growth in earnings whatsoever around the world. We had 0, 0, 0 and some negatives, but you had a multiple expansion from 15 to 20. So 5 over 15, that's 1/3, and the U.S. market rose 31% on no earnings growth. And so if we do have a change in policy, it can be both fiscal and monetary. The response from the markets can be rather quick. In our case, we decided several months ago that it was worth, given the valuation perspectives for the UK, as I mentioned, it's 20% below comparable markets and companies, that it would be very much worthwhile being in the UK market. I'd also say that if we're correct and we don't have too much of a global shock from the coronavirus, and we see that it gets contained rather quickly, and therefore the knock-on effects won't be too great, we should have a big upswing in global output. And if that's the case, some of the, let's say, the larger stocks in the UK, which may be mining and may have, well, let's put it this way, energy and some of the other ones that have been relatively undervalued, would recover their values in that kind of global upswing. So there's a lot to be said for positions in the UK now rather than waiting.
I take your point about this big global market or economy that we're dealing with, and coronavirus clearly comes into the mix when we're talking about the UK. So it's hard to separate Brexit and coronavirus in this window of time. But Nanette, what's your feeling on the momentum, the speed at which you need to move around the UK assets at this point? Because when we were talking to a lady from Credit Suisse and the private wealth, from Goldman Sachs around the private wealth side, she was saying that effectively they've got time to be patient. So what's your view? Is there time to be patient?
We have taken action already. We are overweight the UK stocks for several reasons. There is now a window of opportunity. In particular, investors should be mindful of the fact that the pound might continue to appreciate, and once it gets to higher levels, a number of export sectors might also be faring a little bit less. So I think the timing perspective is one which should bring investors to invest now rather than later.
Home builders, do you want to just take a look at that sector for us? Because the performance has been fairly stunning in this sector. We saw initial wobble on the back of the Brexit referendum and then straight up and away for this sector. Is there any reason to be more cautious? Because if we look at the backdrop, interest rates potentially coming down again, there seems to be some job security. If there's any shortage in skill set around Brexit and the movement of people, then what you've got, a market that could still be positive.
I think that exuberance you always have to look at with a sense of caution. However, if interest rates are going to stay where they are now, or possibly even go lower, then this is positive for any sector that is sensitive to interest rates.
Are rates going lower in your book in the UK?
We don't think so. It doesn't seem to be the case, but there has been a dovish reading of the Bank of England, and I think that when you hear central banks around the world, also Jerome Powell, for once making a reference to the risks posed by pandemics like the coronavirus or to epidemics, then there is a bias, I think, in all central banks to remain very responsive to any sort of concern and risk.
I know you're both dying to talk about the impact of coronavirus for markets. It's a big headline act this week, and we'll come to that in just a moment. In the meantime, Amazon smashed earnings expectations for the fourth quarter, boosted by Prime membership growth and gains in its cloud business. And this is how Amazon stock is faring in Frankfurt today. You've got a bounce of 8.9%. It's been about 11% higher in after-hours trade, and that's versus a couple of other rivals in this space, delivery system that is Deutsche Post and Royal Mail here in the UK. BBVA has posted a fourth quarter loss of 155 million euros as an impairment charge in the US outweighed a strong performance at the bank's Mexican unit. But that loss was not as steep as analysts had expected. Full-year net profit also beat estimates despite slumping by 35%, and the stock bounced 2+%. Well, profit at Spain's CaixaBank more than doubled in the fourth quarter, helping the lender beat analyst expectations. It comes after one-off charges weighed on results in the same period a year ago. A rise in gross income on the back of growing fees and commissions helped to counter a slight drop in net interest income. The stock strong this morning. Coming up on the show, a Canadian billionaire takes a stake in Aston Martin as the airline car maker looks to raise emergency funding.
Get greedy whenever you want. Subscribe to the American Greed Podcast and take your greed to go.
Crime absolutely pays, and it pays a lot.
Some people will do anything for money.
Guys, got hair loss? I know what you're thinking. Should I shave my head? Comb it over? Wear a hat? Just stop. This isn't 1970. Keep your hair and your confidence because Bosley, America's #1 hair restoration expert, can give you your real hair back permanently. Check them out today because they're giving away an absolutely free information kit and a free gift card to everyone who texts STRONG to 234-234. Dude, you don't have to look like your dad because this isn't your dad's hair loss treatment. People all over the country trust Bosley because they're ahead of the curve. They use the latest technology to give you your real hair back. And the best part, Bosley's permanent solution is protected by the Bosley Guarantee. Let them show you for free how awesome your hair could look with an absolutely free information kit and a gift card for $250 off. Text STRONG to 234-234. Ask about the Bosley Guarantee. That's STRONG to 234-234.
Hi, I'm Joan London. Today's senior living communities have never been better, and nobody understands your options like the advisors at A Place for Mom. A Place for Mom is a free service to help you find a place that fits your parents' budget, needs, and personalities. Call today. A Place for Mom. You know your family. We know senior living. Together, we'll make the right choice.
Call A Place for Mom to get your free ebook on financing senior care. Call 1-800-536-7580.
The American spirit inherently competitive, always driven with a hunger, ambition, and an appetite to succeed. The pursuit of prosperity can be unpredictable and thrilling. From breakthroughs to breakdowns, the launches and the crashes. Perseverance is paramount. Knowledge essential.
Good morning, everybody. Welcome to Squawk Box here on CNBC.
That's what drives us. It's in our DNA to provide the information you need wherever you are to propel your dreams forward.
Will take a 20% stake in struggling British luxury car maker Aston Martin. The company will raise £500 million from the deal, which also includes a rights issue and an issuing of fresh shares. Stroll will become executive chairman of the company. Truck maker Navistar has received a $2.9 billion takeover offer from Traton. That's the business that was spun off from Volkswagen. The deal is seen as a move by Traton to expand its North American footprint to compete with rivals like Daimler and Volvo. Traton already owns a 17% stake in the company. Navistar said it was examining the offer. I'm going to come back to our conversation with Nanette Teschler, the CIO, International Wealth Management and Global Head of Economics and Research at Credit Suisse, and Jogri Kiadi, who's staying with us, our guest host. First up, coronavirus. We've seen over the course of this week that about 4/10 has come off the Dow. We've seen move lower in some of the US bond yields as investors weigh up potentially slower growth for the global economy. What do you make of what we've got? Because investors at this point say we're not peak virus, so it's a little bit hard to ascertain.
I think the immediate response is really quite understandable. Safe haven assets tend to do well. So if you look across the board, the market, when it doesn't really know how to price a certain risk, it just flees into what it deems as sure.
It didn't flee this time. It's just a slow trickle back into safe havens.
Well, but still, they have done really quite well. I mean, if you take a look at the Swiss franc, it's at 107 against the euro. So there is just this notch towards safety. And also, I think in the immediate, one should anticipate that on Monday, when all markets are functioning again in China, the regional indices, so assets, risk assets like Chinese equities might very well in the immediate still go a little bit down because, frankly, the trading activity was not at the normal level. I think all of that is the short-term effect. As then markets weigh how the viral outbreak is evolving, and as we are coming closer to a peak in registered cases, then I think the markets will bounce back. And there is back to fundamentals, the view of markets that are attractive. And among those, we think, for example, energy, that has been the sector where fears about global growth have taken a toll in the immediate. These type of sectors could rebound really quite strongly.
Oil, gambling, and some of the other travel stocks. We've seen the impact this week. John, what do you make of the market reaction? Because it felt like last year investors were only picking up on the positives, that any weakness in the economy meant more stimulus from central banks, that you're going to have some positive eventually around a trade deal. So stocks just kept marching higher. Now, as we have a global event unfolding, investors are still leaning to the positive because the earnings look good from some of the companies. So we're just a bit too positive on markets out there. Or am I being too pessimistic here?
I don't know. We've given back some of the gains of this month that were there really in response to better economic reports. We all have to deal with shocks. If we're responsible for capital through the financial markets, we get shocks all the time. Sometimes they're political, like Brexit. They can be tectonic or meteorological. You can have earthquakes and hurricanes. This one's biological, and everybody's really referring back to some of the other ones, incidents of this nature, SARS in particular.
But the Chinese economy is much bigger now than what it was back in SARS. So clearly a huge hit for the global economy versus SARS.
That's interesting because this cycle, if we were in, let's say, a cycle from 4 years ago or 8 years ago where it was generally led by the commodity side in China, I think the impact or the projected impact on the world economy that investors have to assess might have been bigger. It's interesting that it looks to be a different sort, and that's one of the things, if we don't get an exponential spread of the virus, and if it stays to have, they call it an R naught, it has a rate of transmission that and of fatality that's 1/3 that of the common flu or a severe flu. If it stays that way, it will have been a shock. It will have been an assessment. It may bring the anticipations for this year's growth down a notch or two, but it won't be a headwind.
I want to pick
in
up on
that
that
sense.
because one of the narratives out of Europe this year has been that we've got this bottoming out of growth, that 2020 might be a decent year for Europe. But now as we deal with coronavirus, I wonder whether it's just another false dawn for the European economies at this point.
I think most economists would have anticipated the trough in the manufacturing sector, in industrial production, to be in December last year, and indeed the recovery to start taking course in the first quarter. I think an event like the coronavirus might well delay that a little bit, and we might see the trough instead of December sometime in the first quarter. But I do believe that policy response is on the way, also in China, to get the economy really back quite quickly on track.
What does that response look like, do you think?
So for sure, it is still making the access to credit easy. It is facilitating as well the move back into production for the factories that have held back on it. And I do believe that there might as well be support, if required, on the monetary policy as well.
Thank you so much for joining us today. And Nanette Hechler-Feiter, the CIO, International Wealth Management and Global Head of Economics and Research at Credit Suisse. And John staying with us. Well, our Brexit coverage will continue right after the break. And let me toss it out to Jeff.
Yeah, thank you very much, Karen. You've taken the words out of my lips. Basically, we are focused on what is a tumultuous day for the UK as it prepares to leave the EU. So what about the protests we've seen in recent years and months? Will they happen again today? We will talk about that. We will give you a preview, and we will focus on the celebrations where some are celebrating here in the United Kingdom. We'll be right back.
Start your day earlier and smarter on top of the news.
Political turmoil and the Eurozone heating up.
Global markets.
Stocks rebounding.
Ahead of the game.
Time for this morning's big money stories.
Brian Sullivan, Worldwide Exchange, 5 a.m. Eastern on CNBC.
I got the deal of a lifetime on Poshmark. I got these barely worn Louis Vuitton heels, and I paid $100 for them. I would have paid over $700 for these in the store.
Get $5 off your first order. Download the free Poshmark app now and use offer code LOVEPOSH.
Life Room by Four Seasons, where outdoor living meets future technology. No matter your style or budget, Four Seasons has got you covered. Simple shade from the sun? Covered. Outdoor dining and style? Covered. Need additional living space? Oh yeah, that too. Call today and arrange your free design consultation. Four Seasons, we've got you covered.
For me, Squawk Box is breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any other morning show, but you get some useful information.
Squawk Box, weekday mornings, 6 Eastern, CNBC.
At CNBC, we follow the money. This is the big money. For me, Pebble Beach is a really good barometer for the luxury economy. And right now is a huge test because of all the uncertainty of the world. We are running and gunning 14, 16 hours straight trying to interview the collectors, trying to test drive the cars. This year's grand total of $370 million offers the latest sign that the classic car market may be slowing. We cover investing in whatever form it takes.
Trading
is a lot like life. Trading has drama, energy, ups and downs.
I care about cash flow, price to earnings, balance sheet. I like to be fast. More than being fast, I like to be right.
The real excitement comes when I'm able to see something that no one else has seen yet. And when I see that unusual activity, I hit it, and I hit it hard.
Fast Money is America's post-market show.
Fast Money, weekdays 5 Eastern on CNBC.
You don't do it for the money. You do it for the love of the game. And if you're good at the game, the money will follow.
Packaging is going to change dramatically. If it ends up in the ocean, it will dissolve. We have a vision of the zero waste cafe. All of our cups, lids, straws are 100% compostable. Our investment partner, Nestle, has committed to make 100% of its packaging recyclable or reusable by 2025. We're doing this because we believe in it, but we also know that our customers care very deeply about this issue. This is the future of business. I watch CNBC.
Watching Squawk Box, here are your headlines. The Brexit countdown is on. Less than 15 hours to go until the United Kingdom leaves the European Union, following a 53-year membership in the bloc, with the British government due to hold celebrations around the country to mark the day. The Brexit Party MPs make a cheerful departure from the European Parliament for the last time, to the tune of bagpipes and waving Leave umbrellas. European stocks follow Wall Street's lead higher after the World Health Organization declares the coronavirus a global health emergency, but stops short of recommending a travel ban on China. And Amazon crushes fourth quarter expectations, sending shares sharply higher in after-hours trade on the back of record Prime subscriptions and growth in its cloud business.
It's been a difficult 3.5 years, and we've constantly seen protests and demonstrations on both sides in reality, but probably more vocally from those who want to remain within the EU. Of course, it's all done now, and we will exit at midnight CET, 11 UK time. But will there be any demonstrations or protests? When it comes to Le Crunch, how exactly will it play out? Let's get to Steve, who is just across the water from me near Parliament Square.
Yeah, thanks very much indeed, Jeff. Well, on this side of the river, on the north side of the river, there's not a lot going on. I've got to be honest. I've got to tell the story how I see it. And look, as you well know, and the viewers know, we've seen some enormous protests over the years here in Parliament Square, which way preceded the whole EU debate from Britain as well. And of course, over the last couple of years, we've seen some pretty enormous Donald Trump-like protests here in Parliament Square. Who can forget the raising of the Trump blimp attached with mobile phone as well? But quite frankly, there are no protests here in central London at the moment. Not one. There are a few people making their point. We'll come to that in a few moments' time. But the protests, if there are going to be any, are going to be a lot later on. As you say, isn't it ironic that actually 12 CT, it's not even midnight London time. It's 11 o'clock. We'll be leaving the EU as well. And ahead of that, Nigel Farage is going to have his 2-hour party here in Westminster, although it's a no drinking zone. So it's kind of a funny party because there's no alcohol. There'll be no fireworks because they're not allowed. They're not even allowed, and I'll get my cameraman to show you what used to be called St Stephen's Tower, known to our viewers as Big Ben under the scaffold as well. There'll be no Big Ben bongs for Brexit because no one was able to bung a bob for it because it wasn't allowed by the authorities as well. I mean, I can tell you, though, on the alliteration of B's, the bunting is out, otherwise known as the Union flag, the Union Jack. But as you can see behind me, look, Parliament Square, not one person on it. I think they're reseeding the grass at the moment as well. But what I can tell you is that the world's press is here as well. Now, I talked about the Nigel Farage party tonight with Tim Martin, who we know from JD Wetherspoons. He's an ardent Brexiteer. Mr. Farage will be speaking himself. But look, I can just show you the world's press behind me, or certainly a portion of it. I've seen Russian crews from Asia as well. But quite frankly, they're looking for business. They're waiting for some form of business and not really finding much. Now, in terms of the pro-Remainers, the pro-Europeans, well, quite frankly, trying to find their demonstrations is almost as hard as trying to find the Brexiteer demonstrations. I mean, it's quite sad that a chap called Peter French, no irony there, the fact the man's named French, is going to have a demonstration at 2:30 p.m. Richmond Terrace, which is just opposite, literally, opposite Downing Street, which is down there on the way to Trafalgar Square. We're giving you a bit of a geography lesson here as well. He said, well, I'm going to have this protest. I don't know how many people are going to turn up. Is he expecting thousands, tens of thousands, hundreds of thousands? He said, well, there may be a few hundred. And I think this is very important. I think the wind came out of the sails of both sides after October and after the December election, when, as we've reported many times, Boris Johnson got his absolutely stonking majority, which meant the argument was won or lost on that occasion as well. I mean, there's one gentleman who was standing around here. I don't know if I can get this gentleman to turn around a moment. He's got basically his Union Jack vest on as well, being interviewed by, again, the world's press. That's all they can find here. I'll tell you what I have got, though. I've got an apple, and this may just look like a normal apple, but this is a Union Jack apple with the word EOS on it. Now, I don't know if it's a limited company, so I don't know if I should be holding this thing as well and touting it, but it's from the British Apple and Pear Association. Yes, there is such a thing as the British Apple and Pear Association, and you classic studies out there will know that EOS is the Greek goddess of dawn, and so they're looking for a new dawn as well. So, Karen, I will be standing here with the rest of the world's press. I will be looking for some form of protest, but in the meantime, I'll tell you what, that is a very good apple. That is a Brexit apple. Dare I say, I'm not sure I should be eating it, but there you go.
I wonder whether you should wash the chemicals off first and whether those chemicals have alignment with the European rules at this point.
I'm hoping it's organic.
And Steve, I love how you're having this each way bet on your clothing about whether you don't want to be the man standing there in a suit if you're in the middle of protesters. So he's got a little bit of both the tie and the jeans on. I'm sure our viewers, eagle-eyed viewers, would have noted that. Well, the UK and the EU will now enter into formal trade negotiations. Britain is hoping to strike a deal with the bloc during the Brexit transition period, which ends on December 31st. Well, Juliana joins us with more from Dover. Juliana, around this date, Brexit date, there's been heightened alert. And even if you go to the Port of Dover website, they've been talking about be prepared, be good to go. And they're talking about documentation that travellers, drivers should carry on them. Just talk us through the issues, because it feels as though this is a bit of a false start around what could happen later on this year if there's no deal.
Karen, that's definitely a fair assessment. And let's just put this into context, why Dover is so important. It's Europe's busiest ferry port, handling 17% of the UK's traded goods. So it's really right at the epicenter of this trade relationship between the EU and the UK. Now, starting today, it is business as usual for the next 11 months as the British government tries to hash out an agreement with the EU on trade. But we can't forget that a hard Brexit is still a very real possibility. Even trading under WTO rules is still a very real possibility, which could mean border checks and bottlenecks when it comes to traffic in a place like Dover. And in terms of the UK's trade relationship with Europe, the other EU 27 member states account for 45% of the UK's exports and more than half of imports. So this is obviously, goes without saying, a crucial trade relationship. And in terms of what actually comes through Dover, we're looking at 2.5 million lorries per year, 12 million passengers. So if we do enter a situation where the relationship is one with friction, we are looking at a serious impact on a region like this. And Operation Brock was a plan that the UK government had put in place in an attempt to get ready for a potential crash out of the UK from the European Union. This was a traffic management system that they had prepared. This week, they've removed the motorway barriers that were put down as part of that plan. But should we look at it, should we enter a situation where there are regulations put in place and it's not as frictionless as the UK would hope, then we could be looking at reinstating a plan like that. And just as a reminder, we'll leave you with this. Dover did vote for Brexit. 62% of the residents here voted for the UK to leave the European Union, despite all the challenges that would come for this region if as a result of that. Karen?
Very much for that. Meantime, Brexit MEPs ceremoniously paraded themselves out of the European Parliament in the last hour, marking their last day representing the United Kingdom in the EU. This was only one of the Brexit Day festivities. Union Jack colours lit up Brussels' main square last night to highlight Britain's formal departure from the EU at midnight CET. The UK will continue to obey EU rules during the coming 11-month transition period as it enters a new era of continental relations. Let's get out to Sylvia for more in Brussels. Sylvia, the irony here, a lot of Europeans turning up to a party they never wanted to attend in the first place.
Well, that is indeed the feeling here in Brussels. Overall, this city is very pro-European. These institutions believe in the European project. And so the overall feeling is very much of sadness. We're witnessing 73 British lawmakers leaving the European Parliament for the last time. They're ending their political careers here in Brussels. And the second practical change that we're about to witness today is really the Union Jack flag that you can see over my shoulder is going to be removed later this evening, and that's when it will be displayed for the last time outside the European Parliament. But let's just mention for a moment fisheries, because this is set to be one of the most controversial issues as we head to the next phase of the Brexit process. Michael Gove was mentioning fisheries not too long ago, earlier this morning. And so what we know at this stage really is that at the moment any vessel registered in the European Union can work across the EU. So this means that French fishermen, for instance, can work in UK waters. But the UK wants to end this reciprocal access, and that is raising concerns across many coastal towns all over the European Union. So let's watch for what happens when it comes to fisheries. But as we said before as well, the European Union wants to talk about fisheries. At the same time, it talks about the other subject areas, and that, of course, includes financial services. So let's see how that potential trade agreement will look like in the future. And on that note, I'll hand it back to you, Jeff.
Thanks very much indeed, Sylvia. We are across the water from the Palace of Westminster here, trying to figure out how you're going to make money out of the UK. Okay, we have the formal departure, but what does that mean given that we stay within the EU rules and we have another 11 months or so here while we continue to negotiate over a trade deal with the EU and other countries? Hugh Gimber has joined me from JP Morgan. He is a global market strategist there. Hugh, thanks very much for stopping by here. Let me just ask you, just on Brexit specifically, are we done now with the main market risk from Brexit?
I don't think we are. So there's going to be sabre rattling to come over the next few months as both the UK and the EU position themselves ahead of these negotiations. And really, this is the difficult part of this situation. So we've now negotiated the exit, but really it's the ongoing relationship which is going to be a lot tougher. That being said, there's a lot of other more positive things going on in the UK today. And so for me, when I look at the UK market, I'm thinking just as much about the coming fiscal stimulus and the valuation picture as much as I am looking at the political headwinds.
Yeah, and that's the head scratcher, isn't it, for an investor? Because you know that there are going to be good days and bad days around the negotiations, which will affect sentiment. But this government has said there is a fiscal tsunami coming to help Brexit Britain. What do you think the best approach is then to allocating to the marketplace here?
So really for the UK, I think it's a story of being able to tap into that picture of improving global activity at pretty cheap valuations. And so we've been talking for several months, several quarters around how the UK market looks cheap, but really waiting for a catalyst to start to drive that pickup in valuations. And so from an international investor perspective, I think you now have a clearer runway, particularly with a majority government and no election until 2024. So I would expect flows to return to the UK equity market this year and trying to tap into some of those parts of the economy that really do look to be improving, such as the housing sector, where the data that we've had over the past couple of months would be pointing to an upturn.
Let's just talk about the competing arguments. I mean, if you're a domestic investor, you're in sterling anyway, you go with the flow. If you're an international investor, can you get a better entry point on a weaker pound if the negotiations go poorly? Because what are we now? We're sort of bouncing around 130, but I have seen some forecasters suggesting 120 could be a bottom if the trade negotiations are difficult.
So I agree that there is still headline risk to come, but that being said, we've seen over the past 3 years that at some point pragmatism has always prevailed. And so I don't really see it in either side's interests now to take those negotiations in such a difficult direction that you could push the pound as low as the 120 figure that you've been describing. So clearly calling FX on a very short-term basis is a challenging game, but I do think that there is a decent entry point now for UK equity investors.
Right, and that's important because in the global context, I think people with coronavirus and other issues bouncing around are just trying to figure where to allocate which markets, which geographies, which size cap, given that you've got a number of global headwinds at the moment. The virus is one, but growth is the other. Just put the UK into context for us across the whole investing panoply.
So in that context, the dividend yield on the UK is also really important. So since the start of the year, we've seen a further decline in government bond yields, and that makes the attractive income from UK stocks even more interesting in this environment. So I think that's going to be a real focus for international investors at the same time as you're looking for a global uplift in activity and accessing some of those international earners. Now, this isn't an overly bullish story for the UK, nor is it an overly bullish story for global risk assets this year. There are still plenty of headwinds, but I do think that you're trying to find ways in which you can access markets not at overly expensive valuations, and the UK market would fit into that category today.
The Bank of England didn't come as close as many thought it would do to a rate cut, given the signalling that we'd had going into the meeting yesterday. What do you think's going on?
It's always a risk when MPC members are communicating to the market shortly ahead of an event and trying to point in one direction. The bank had said back in the start of the year that they were going to be watching the recent data very closely, and clearly the better PMI data that we've had and the better labour market data was enough to sway them in that direction yesterday. For me, the main message is that the Bank of England have told the market if the data weakens over the coming months, they'll be willing to step back in and provide stimulus to the UK economy. That was my main takeaway from the meeting yesterday.
Okay, but we're not ready yet, but it's there waiting to go in case the market needs it. Hugh, thanks so much for coming to join us. Hugh Gimber with us from JP Morgan. Karen, let me send it back to you from Westminster.
Jeff, thank you very much. I want to take our viewers back to the market action. We are seeing a positive response to our markets around coronavirus. A little bit of stabilization kicking in on Wall Street after WHO comments about a global health emergency, but at the same time praising some of those Chinese efforts to contain the virus outbreak, and that move on Wall Street. Also a bit of action from Amazon after hours has stoked some of the green on these boards today. Meantime, shares in the French healthcare company Novacyt have spiked in early trade after the firm announced it launched a new coronavirus test, chemo for that stock. Amazon's rallying in Frankfurt after extended trading took the tech titan's market cap above $1 trillion following a blockbuster set of earnings. And meantime, Aston Martin on the corporate side shares are on track here in Europe for their best day on record after billionaire Lawrence Stroll takes a stake in the British luxury car maker as part of an emergency funding round. And in Spain, Caixa drives the IBEX higher after beating on fourth quarter profit expectations. BBVA, one of the big movers too in Spain. But it's all about the UK today around Brexit and sterling. We have seen some significant moves this morning in the trade. 131, we were around that 130 handle, so we're pushed higher by about 0.33%. It's also knocked the FTSE 100 off its perch. We were trading firmer on that, so all the dollar earners reversing, and you can see that has taken the stock market down by 0.25%. Quick one, John, on this, because we've had some consumer confidence numbers better than expected this morning. What do you make of the action in sterling?
Well, it looks as if markets, look, this is short-term volatility, but sterling looks to be in a range right now, and it has support from, let's say, the lack of central bank action to cut rates and the positive fiscal stimulus to come that's been clearly announced by the government. Also, there's some risk off.
Right. John, thank you very much. We're going to leave that just there for the moment. We've got events unfolding now, as you can see, in Hong Kong. Chief Executive Carrie Lam is holding a press conference on the coronavirus outbreak. Let's listen in.
Hong Kong time, that they made a statement on the latest update on this novel coronavirus. Now, perhaps I will highlight on parts of the statement relevant to Hong Kong. And then secondly, we're going to report to you on the progress of implementation on the announced measures. And thirdly, we will report on our further prevention and control actions. First of all, on the World Health Organization statement, they have taken on board the recommendations of the emergency meeting. First of all, the WHO welcomed the effort made by the People's Republic of China on to control and prevent the disease. And it is a matter of international health. This constitutes a public health emergency of international concern. And if I may point out in the statement, they say that they have decisive and resolute measures should be taken. So then they will prevent the spread and control the disease. So as long as we take such measures and then we track all those involved and so on, and take all necessary measures, it will help to stop the spread of the issues. But then there are of course constant changes in relation to the epidemic, and then there is a need to make corresponding adjustments to the measures. As you might recall, in the past week we've been closely monitoring the latest issue and in making the necessary adjustments. This week we have announced 8 corresponding measures in response. And then we have looked at each of these measures. And then we try to compare it with what is said in the statement and find that most of the measures match those suggested by WHO. Of course, there are certain areas where we could do even better. Now, in fact, we have adopted some of the measures before the WHO made such suggestions. For example, early detection, isolation, management of cases, tracking, and so on. We will regard to the recommendations made by the WHO, and it will take concrete measures, including that at international border control there should be exit screening. This is and then we should reduce social contact. We must give better protection to healthcare personnel, and then there must be some better communication. The SAR government will follow closely the suggestions made by the WHO, and then in light of developments, we will make necessary adjustments to measures announced. Now, on the second part, that is the measures that we have taken, I would like to report on the implementation. Now, usually at 4:30, the Hospital Authority and the Department of Health, that is in particular the Center for Health Protection, they would host a press conference at 4:30 to give you the latest update. But of course, that press conference has been replaced by this one today. As at 9 a.m., the Center for Health Protection, they recorded 12 confirmed cases of novel coronavirus infection. And then out of those, 11 cases are imported or related to imported cases. One case is still under investigation. So for that one case under investigation, of course, it will be of great significance. And then 5 of those cases are Hong Kong residents, 7 are mainland residents. As at noon yesterday, 680 cases met the reporting criteria. 478 of those cases have been ruled out to have nothing to do with the coronavirus. As for another 191 cases under observation, they are still in hospital undergoing checks. And then of these cases, 550 involve Hong Kong residents, 130 cases involve non-Hong Kong residents. I understand that tomorrow the Hospital Authority will be able to carry out the rapid test at the 7 clusters of hospitals. There is no need for them to send all the samples to the Department of Health Center for testing. So with this new testing arrangement, it will help us to speed up the test, and then we could get the results sooner, and then that will help to lessen the burden on healthcare staff. On the 28th of January, we announced a number of measures. They could be grouped into several categories. First type, they would substantially reduce the population mobility between the mainland and Hong Kong. As at yesterday, because there are various cross-boundary traffic services, and they've been reduced, and it started yesterday. So yesterday was the 30th of January, and the incubation period is 14 days, so 16 days before yesterday, for all arrivals from the mainland and all the boundary crossing points except the airport. Now, compared to the 14 days ago, the number has dropped by 91%. Yesterday, the number of arrivals, mainland residents only accounted for 9.7%.
Chief Executive Carrie Lam outlining the cases around coronavirus there in Hong Kong. 12 confirmed cases, 11 of them imported, 1 they don't know at this point, which suggests that they're looking for human-to-human transmission of this virus still. But you can see, John, that they're dealing with hundreds of suspected cases. Some of them are not turning out to be coronavirus at this point, but a huge weight on authorities there in Hong Kong now, not just China and Wuhan, but in Hong Kong. What do you make of the events for investors weighing up what this impact should be on the economy?
We have to see whether or not it is a global shock and whether or not it will affect GDP and output. It's clear there's an effect on China. It's also clear that the authorities are acting quickly and are doing their really level best to get this under control. We'll know over the next, let's say, 4 to 6 weeks, given how SARS evolved and MERS and some of the other ones, whether or not we're going to have exponential growth in this or it will be contained. What is helpful is the fact that it seems to be very little person-to-person contagion.
John, thank you so much for joining us today. John Ricciardi with us, Head of Global Asset Allocation at Merian Global Investors. And of course, this is Brexit Day. As I hand it back over to you, Jeff, pound firmer today, 131 handle now.
Yeah, Karen, just a reminder, of course, it was Mr. Cameron that took us all into this. And at the time of the referendum hustings, he said a vote to leave is the gamble of the century. Well, it's a gamble that the British public took, and we will leave at midnight CET tonight. Stay with CNBC. We'll be right back with Street Signs. Thanks for tuning in to this special edition of Squawk Box.
The CNBC app has new features just for you. With real-time market data, create custom watch lists, get stock quotes, and get your own personalized alerts. Keep up with top videos, get the latest podcasts. And now you can watch CNBC live with a daily free preview.
Let's just say it's your opportunity.
The CNBC app. Download it today.
It's so easy to sell on Poshmark. You just pick out your item, snap a couple of photos, and boom, it's up for sale. When I look at my old clothes now, I see dollar signs. Just this month, I've made a couple $100 on Poshmark just selling items out of my closet.
Download the free Poshmark app now.
Pain, swelling, stiffness. When your hands hurt, you can't function. Until now. Introducing the new CopperFit compression gloves with sure grip technology to give you more power, more control, and more agility than ever. Our most advanced copper-infused compression fabric woven into an ultra-lightweight performance glove that fits like a second skin to support relief and recovery of sore muscles and painful joint stiffness. And new Sure Grip bands built in to provide a strong, non-slip grip for more power and control.
You need total control of your hands when you're doing anything with construction. Your hands are your livelihood. The CopperFit gloves are great. The grip is outstanding here with these different ribs. It makes my hand a lot more usable. It just feels like you're just ready to start the job.
The gloves have been a game changer for me. They help with flexibility and pain and soreness. They allow me to do my job even better.
Breathable wicking fabric with an open finger design for full range of motion, feel, and control.
They relieve my pain. When I grab something, I'm not in pain. The support or whatever magic these things do, I don't know what it is. It doesn't matter to me what it is. It works.
I get a lot of pain, and it can make it difficult to do the smallest thing. While I'm wearing this, I do not have any pain. I can use it on the keyboard. I can use my phone. I drive with it. I sleep with it. I love this glove.
The new Copperfit compression gloves with sure grip technology. Relief from painful muscle and joint soreness. Guaranteed or your money back. Or call 1-800-645-9179 or on the web at getcopperfitgloves.com for only $19.99. Order right now and your shipping is free.
I've tried it. I use it. I know it works.
Copperfit gloves definitely just make my life better.
I've used Copperfit before. This has helped my hands so much. These things work.
Feel better with copper-infused compression. Ask for it by name. Copperfit compression gloves.
We are the dreamers.
We changed the world.
Because we don't give up.
IU can help you live your dream.
IU is an online college, so your campus is wherever you want it to be.
Take classes when you want to take classes.
You receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
Call IU, then tell them your dream.
1-800-967-0542. 1-800-967-0542.
Start your day earlier and smarter. On top of the news.
Political turmoil and the Eurozone heating up.
Global markets.
Stocks rebounding.
Ahead of the game.
Time for this morning.
Good morning, everybody, and welcome to this Brexit Day special edition of Street Signs. I'm Jeff Cutmore.
And I'm Shomana Versace, and these are your headlines.
The countdown is on to Brexit. Midnight tonight, CET, the UK will leave the EU. We are just 15 hours away following a 53-year membership of the bloc. The British government is due to hold celebrations around the country to mark the day. Brexit Party MEPs are making a cheerful departure from the European Parliament for the last time to the tune of bagpipes and waving Leave umbrellas.
And Hong Kong shuts up to 30% of its bank branches amid the coronavirus outbreak after the WHO declares a health emergency. But stocks rise as it stops short of issuing a travel ban on China. And Amazon crushes fourth quarter expectations, sending shares sharply higher in after-hours trade on the back of record Prime subscriptions and growth in its cloud business.
So it's taken over 3.5 years and many hours and days of acrimonious debate, protests in central London, in fact, protests in other cities in Europe, but finally a resolution between those who wanted to remain and those who wanted to leave. Brexit will take place officially at midnight CET, 2300 hours GMT. But what will actually change? Well, the reality is nothing. We will continue to live in the UK under EU rules. 11-month transition period falls into place. UK members, though, will immediately lose their seats in the European Parliament, and British leaders will no longer take part in EU summits. Today marks the end of the UK's membership, which came into effect on January 1st, 1973. Members of the cabinet are set to gather in northern England before Prime Minister Boris Johnson delivers a special address to the country at 2200 GMT. Now, what about the celebrations? Government buildings will be lit up in red, white and blue, and Union Jack flags will line Parliament Square to mark the occasion. Finally, a countdown clock will be projected onto number 10 Downing Street. But Jemana, as we've pointed out a number of times this morning, there will be no bong from Big Ben here at the Houses of Parliament. They were going to have a whip round. I think there was a funding campaign that was started, but the reality is that will not happen, although, of course, there will be other celebrations in other parts of the UK.
Indeed, Jeff, it might be disappointing for some, but instead of focusing on the big bong, let's focus on the big picture, which is that it is going to be a historic day. And for that, we have a cast across the UK and Europe to mark this event. Steve is in central London following the protests, and Juliana joins us from the UK border in Dover, and later we'll be joined by our very own Sylvia from Brussels as well. So let's get out to, well, before we do that, actually, let me just start with what we are expected to hear from the Prime Minister later today. Brexit will signal the dawn of a new era. That is what UK Prime Minister Boris Johnson will tell the nation in a pre-recorded television address tonight, according to extracts released by his office. Johnson will also call for unity and will describe Brexit as a moment of real national renewal and change. And on the back of that, let's take a look at how the pound has been faring this morning. We're actually trading firmer. And I would say that partially one of the reasons why we are seeing this uplift in the pound is the fact that the Bank of England yesterday didn't do anything on the monetary policy decision. Same vote as before. That was read slightly hawkishly by the market. And remember, they are keeping that modest tightening bias, up 0.3 of a percentage point. I just want to point out that since the referendum itself, since June 2016, the pound is still about 10% weaker. At one point, we were 20% weaker. So we're about halfway from top to bottom. That is it for the pound, though. But let's get back out to Jeff.
Yeah, it's interesting, Jemana. It reminds me of that day, 23rd of June, 2016, when Steve and I were encamped here on the south bank of the Thames in a tent, effectively tracking market developments around the referendum result. And you'll recall that the forecasters, the pollsters, were all telling us that it was all going to be over, that David Cameron's gamble had paid off, and ultimately the Remainers would win the vote. And of course, it didn't turn out that way, and we immediately saw that 10% plunge in sterling as those results started to trickle in to confirm that, in fact, the UK would be leaving the EU. Of course, it's taken over 3 years to get to the point where we do have the formal exit. And of course, Steve, there's been an awful lot of demonstrations from both sides of the argument in that time, most of which you've been somewhere in the middle of.
Yeah, and it's been a real pleasure, actually, because I've got to say, throughout most of the protests I've covered, whether it's anti-Trump or it's Brexit or Remain, actually the nature has been very, very good from 95% of people. Actually, there's been a few extremists, but by and large. But look, I just want to show you, look behind me, apart from the bunting there, look at Parliament Square. It's empty. The only thing missing is the tumbleweed. And look, we've seen suffragettes, we've seen poll tax riots, we've seen Brexit, we've seen Trump, we've seen the Countryside Alliance, we've seen hundreds of thousands, nay, millions of people over the years using this and Trafalgar Square up the road as the congregation point for enormous demonstrations for and against issues over the years. But today, it is quite extraordinary. I do really believe there is a story in itself, that there is no one here. I saw a very damp-looking EU flag earlier on being held forlornly by a chap in an EU stars, blue and gold beret. I saw a bloke with a pro-EU T-shirt on, but that's it. 3 protesters. I've seen one gentleman on the other side with a Union Jack. So I've been waiting for this for 4 years. But the fact of the matter is, after October's stunning demonstrations against Brexit, and let's face it, there were hundreds of thousands of people from Trafalgar Square all the way down past the Cenotaph and Downing Street to my left, right to here in Parliament Square. They're gone. And I think the UK general election in December took the wind out of the sails of both sides, because the debate, the argument was done. As soon as Boris Johnson got his big majority, it was fact that he would get through his version of the withdrawal agreement bill. So all of those bills I stood on Abingdon Green just over there for over the years, it all became immaterial because Boris Johnson had got his deal. I mean, look at Big Ben. It even looks flawed. This is actually, it used to be called St. Stephen's Tower or the Clock Tower. Now it's just a scaffolding. It's actually called the Elizabeth Tower, and the bell itself, as you well know, is called Big Ben. But there'll be no bunger bob for Big Ben bongs from Boris over Brexit. That's a good bit of alliteration. Try doing that 10 times. Because, as you say, the crowdfunding didn't work. There'll be I understand the tricolour will be superimposed on Downing Street. I beg your pardon, the red, white and blue of the Union Jack. Same colours, by the way, obviously. Churchill, he's looking over this, what to make of it, because as we all know, Churchill, a massive fan of having a European Union. The question from Churchill, on both sides have seized upon this, was whether he was a pro-UK in the EU, or actually he saw the European Union functioning with the UK outside of it as well. So it was always fascinating to watch everybody from Nick Soames, his grandson, a Tory MP, to others claiming Churchill as their own. Let me just show you what is going on in Parliament Square a little bit. And by the way, look, London is ongoing. There are commuters galore. I'm sure the pro-Brexiteer and pro-Remain demonstrations later on would love these kind of numbers crossing the road now, because they might not get it. I've got the world's press. Look at them. Have you ever seen a more bored bunch of journalists? Look at them. Absolutely nothing. They've got no trade to ply today because we're not seeing any protesters. But I may be wrong. It may all kick off later on when everyone leaves work, because there are two big demonstrations around here later on. Well, I say big, maybe. 2:30 p.m, a chap called Peter French, who's part of a pro-EU group, he's going to be trying to get his A Bientôt à Europe demonstration going at Richmond Terrace, opposite Downing Street. He's not expecting tens of thousands. He's saying, well, if we get a few hundred, that'd be interesting. And then after that, of course, the pièce de résistance from Nigel Farage later on, his Brexit party. My problem, he's not allowed any fireworks, he's not allowed his big bang bongs for Brexit. Oh yeah, no alcohol, because this is a no alcohol zone in Westminster as well. Not sure that's the kind of party many people of our viewers want to go to. Back to you guys.
Steve, you make the lack of protest sound very exciting, and indeed, as you very well captured, there seems to be somewhat of Brexit fatigue out there as far as those demonstrations are concerned. That is Steve Sedgwick in Westminster. Now, the UK and the EU will now enter into formal trade negotiations. Britain is hoping to strike a deal with the bloc during the Brexit transition period, which ends on December the 31st. And now let's get out to Juliana, who's in Dover, which is one of the UK's key trading ports. And I think it is worth reminding viewers, Juliana, that we are now entering into this transition period for the next 11 months. Nothing should really change on the trading front, but I just wonder whether overall trade volumes, activity going through Dover has been impacted since the referendum. What can you tell us?
Thank you very much, Jumana. Well, this is absolutely right at the epicenter of the trade relationship between the UK and the EU. 17% of the UK's traded goods come through Dover. So anything that comes of these trade negotiations over the 11 months is going to mean a whole lot here in the port of Dover. Now, as you mentioned, I mean, right now it's really business as usual here. For the remainder of the year, things will continue as they have when the UK has been a member of the European Union. But let's not forget that we could still be looking at a hard Brexit scenario, which, there's been estimates all over the place in terms of what that could mean for trade volumes. But in terms of what it could mean for Dover itself, the logistics, one of the key problem areas is the potential for a backlog of traffic with the lorries. 2.5 million lorries pass through Dover every year, 12 million passengers. And you can see behind me the road. This is an area that gets very congested very easily. And we know that Operation Brock was designed in anticipation of a potential crash out of the European Union. This was a traffic management system which imposed motorway barriers to try to control the flow of traffic and prevent a backlog of lorries here. So clearly there is a logistics challenge as well as a potential trade volume challenge. That's a much bigger question for the UK. In terms of the scale of the what's at stake here, the European European Union, the 27 member states outside of the UK, account for 45% of the UK's exports and over half of their imports. So this relationship, of course, without question, is crucial for the United Kingdom. And just as a reminder, here in Dover, despite all the challenges that come with the UK leaving the European Union, they voted 62% in favor of the UK leaving back in June 2016. Well, with that, I will hand it back to you in the studio, Jemana.
Excellent, Juliana. Thank you for the summary, and very interesting to see how things will evolve there. As she mentioned, Dover is very much the epicenter of trading activity between the UK and EU, so certainly a big factor that we'll be watching over the next 12 months. Now, moving to some company news today, Electrolux shares are lower after the Swedish home appliance manufacturer warned about the impact from coronavirus. The group says the epidemic could have a, quote, material financial impact should Chinese suppliers be affected further. But the company says it is implementing a contingency plan to mitigate any extended impact. So, well, let's get out to Jonas Samuelsson, who is the CEO of Electrolux and joins us from the phone from Stockholm. Can you tell us a little bit more about the potential impact from coronavirus? That seems to be the part of your press statements earlier that investors are picking up from. And certainly there's concern that it will hit the supply chain in the first quarter of this year.
Right. So obviously, as I think you know, a lot of factories in China have been, the Chinese New Year has been extended for one more week of shopping. It's reasonably manageable, but the concern that we're highlighting is that, of course, if that gets extended significantly, there are significant product categories for us that are supplied mainly out of China, such as microwave ovens and portable air conditioners and small appliances and such. So we wanted to highlight that. But of course, as of right now, we don't have any specific information about further challenges.
And just to ask you, what assumption are you working on? I appreciate it's very difficult at this point to ascertain how long the closures are going to go on for. But what is your baseline scenario? Do you think that the supply chain could be affected for 1 or 2 months, or are we talking, up to 6 months or even the full year?
Well, again, it's very, very difficult to assess, but we have many suppliers in China. There are significant volumes coming out of there, and if that gets extended much further, of course, there will be a corresponding impact, sort of week to week. But it's impossible to quantify and scale that at this point.
And can I just ask you?
Yeah.
I just wanted to ask you about the outlook, coronavirus aside, because again, you did warn in your press statement that the business mix is going to be somewhat unfavorable for the coming quarter, but better in the latter half of the year. What are you seeing on that front? Because I would have thought with the relaxation of the tensions between the U.S. and China on the trade war, that would actually be a positive catalyst for your business.
Right. So for us in the first half of the year, we have a specific issue with a major manufacturing ramp up that we have in North America that impacts availability and adds some additional cost. And as we come out of that towards the second half of the year, we expect the results to improve materially. So that's, I think, more of an internal issue. I agree with you that the relaxation of the trade tensions are a net positive, and of course we would welcome even further relaxation there.
And talk to me about your pricing. Were you able to push through higher pricing to your customers last year?
We were. We fully offset the headwinds we faced in terms of tariffs and raw materials and currency through price. So I think we're quite pleased with that. But of course, it's hard work to do that, and of course, it impacts the price and for consumers of our products eventually.
One final question for you on disruption in your space, and we're coming off the heels of very strong earnings out of Amazon yesterday. And the reason I bring up Amazon is because they also are setting their eyes on smart homes. You see more and more technological companies wanting to venture into appliance makers, a traditional space that you obviously are involved in. How are you viewing that? And do you feel the pressure is on from your perspective to tech up a little further so that you can compete with these tech companies that are eyeing your space?
Yeah, I think obviously we're extremely focused on providing great innovation to our consumers. And at the end of the day, we're really experts in terms of helping consumers make great tasting food or care for their clothes. And additional technology will help us to enhance those experiences further. And I think, just comparing to other tech companies. I think our deep competence there will keep us ahead as we continue to drive the technological development as well.
All right, Mr. Samuelsson, we'll leave it there. Thank you very much for joining us. Jonas Samuelsson, the CEO of Electrolux, with us. Also coming up on Street Signs, the World Health Organization officially declares the coronavirus a global health emergency as the death toll climbs. More when we come back.
I use Poshmark to sell all the clothes that I haven't worn in months. I can just hop on the app, take a few pictures, put it up, and start selling in minutes. It feels amazing to have a ton less clutter in my closet and make a little extra money on the side.
Download the free Poshmark app now.
Robinhood believes now is the time to do money without the commission fees, so you can start investing today, wherever you are, even hanging with your dog. So, what are you waiting for? Download now and get your first stock on us. Robinhood.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
Life Room by Four Seasons, where outdoor living meets future technology. No matter your style or budget, Four Seasons has got you covered. Simple shade from the sun? Covered. Outdoor dining in style? Covered. Need additional living space? Oh yeah, that too. Call today and arrange your free design consultation. Four Seasons, we've got you covered.
On Squawk Box, inside the latest numbers from retail, cloud, and devices titan Amazon. How did holiday deals boost the bottom line? Today, 6 a.m. Eastern on Squawk Box. Watch or listen live on the CNBC app.
Welcome back to Street Signs. Well, the World Health Organization has declared that the coronavirus outbreak is a global health emergency. Now, at least 213 people have died in China, mostly in the Hubei province, and nearly 10,000 cases have been detected. The WHO Director General said the spread of the virus to 18 countries is the main reason behind the declaration. The health chief praised China's response to the emergency.
The speed with which China detected the outbreak, isolated the virus, sequenced the genome, and shared it with WHO and the world are very impressive and beyond words. So is China's commitment to transparency and to supporting other countries. In many ways, China is actually setting a new standard for outbreak response, and it's not an exaggeration.
And Hong Kong Chief Executive Carrie Lam's administration is holding a news conference on the latest on the efforts to combat the coronavirus. Lam has urged residents to avoid traveling to mainland China and laid out new measures to fight the growing epidemic, including better protection for healthcare workers.
At international border control, there should be
exit screening. This is and then we should reduce social contact. We must give better protection to healthcare personnel, and then there must be some better communication. The SAR government will follow closely the suggestions made by the WHO, and then in light of developments, we will make necessary adjustments to measures announced.
All right, let's see how some of the European coronavirus exposed stocks are faring this morning. And remember, we've been following these particular sectors very closely all week, starting with some of the basic resources names. You can see that most of them are predominantly based in the UK. Glencore and Antofagasta still trading on the back foot this morning, down about 0.4 to 0.5 of a percentage point. And then we have the luxury companies seeing a little bit of green on the board today. Kering, Hermes are slightly up in positive territory. LVMH weaker despite the better earnings that we had a couple of days ago. And then obviously airlines are very much in focus as well. Mixed picture, but again, doing slightly better, perhaps on back of a WHO ruling that China are doing the right things to control the pandemic. But certainly it has been a very, very rough week for all of those sectors that are somewhat linked or have exposure to China or travel on the mainland as well. So that is the picture for those stocks. Let's also switch to fixed income. And again, here you can see that we are seeing somewhat of a relief risk-on sell-off come through. The 10-year bond is trading at around -40 today, so a couple of basis points higher. 10-year Italy still below 1%, trading at around 94 basis points. 10-year gilts at 55. And remember, yesterday we had somewhat of a hawkish surprise come out of the Bank of England with them not cutting rates and the vote split saying that staying the same, and also pointing to further tightening in the future. So that was a bit of a hawkish catalyst for the UK fixed income markets yesterday. 10-year US also we have trading, well, it's not up there, but it's trading at around 157 with about 1.5 basis points higher on the session as well. Now, following the WHO declaration, the U.S. State Department has advised its citizens against all travel to China as the coronavirus threat spreads. Americans in China were urged to consider departing using commercial means and warned that travel restrictions may be put into effect with little or no advance notice. All non-essential government personnel have been instructed to defer travel to the country. All right, let's bring in Chris Watling, the CEO and Chief Market Strategist from Longview Economics. Lots to discuss today. Let's start with coronavirus. I'm reading so many different reports out there purely on the economic impacts. And I was just speaking to the CEO of an appliance maker who said that there will be an adverse impact from a supply chain perspective on their business in Q1. Estimates like China GDP could be expected to drop to 5% in the first quarter, shave some GDP off the U.S. economy as well. I mean, how are you thinking about this purely from an economic hit standpoint?
Yeah, I mean, obviously, it's in some senses it's quite important what happens in the economy. But to be fair, I mean, generally markets look through these sort of one-off type shocks. You know, whether it's a hurricane event that we've seen in the States many times, or all sorts of issues you get over the years. These, you know, there's an argument they can trigger recessions. They can be the shock that does it. I think it's highly unlikely, particularly when you think of all the recent virus outbreaks we've had over the last sort of 10, 20 years, whether it's SARS or bird flu or MERS or even Ebola, all these sort of things. Actually, markets often look straight through them. Economies bounce back. Spending's a bit either deferred or it goes on other items. And generally, economies, you know, you get a one-quarter GDP hit. Maybe it's China-focused or it's a little bit more global. They look through these things.
Yeah, and eventually they do look through these things. But as we were just talking about, there are certainly sectors that are getting hit. You know, the airlines sector got severely hit this week. Basic resources, luxury, any single sector that has exposure to China. So when you think about your trading, are you looking to redeploy cash away from anything that might have some sensitivity towards China here?
Well, I think what these things do is they create opportunities to get into stuff you might want to get into. So they're short-lived and short-term. And, you know, people have to hedge their portfolios, so they hedge positions in individual names, whether it's airlines or similar types of stocks. And that hedging creates the downside, and that creates the opportunity. So that I would see this as an opportunity to move money into things you want to move it into.
Now, one element that has popped up in the last couple of days is the movement in the renminbi. So yuan has again broken through that key psychological level of 7. We sort of bounced around there last year. It appreciated into the phase 1 signing, and now we're coming off again. Do you think there's a risk that the Chinese authorities' response to the coronavirus outbreak will lead to perhaps a breach of what they agreed on in phase 1, either from the currency side or either via very strong support for some of their state-owned entities?
Well, again, I suspect this is a bit of a temporary thing. And I mean, it may be also that the market's thinking they need to price in a bit of loosening out of China to reflect the response to the short-term economic upset that's been created by the virus. So it may be the market's thinking they need to price in a bit more of a cut there, and that's part of what's going on in the currency. But again, I wouldn't read too much into these things. They often correct themselves and reverse, and as I say, these are opportunities.
Okay, a slightly more positive take then, because there are lots of people very, very worried out there. Okay, Chris, so we'll pick up the conversation in the next segment. Chris Watling, CEO and Chief Market Strategist from Longview Economics. Also coming up in Street Signs, we'll have more on Brexit and the coronavirus after the break when I speak to the Chatham House chair, that is Jim O'Neill. Stay with us.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
Rising energy costs are frustrating. Electricity rates continue to increase, and there's no relief in sight. It's also smart to prepare for power outages that can leave you in the dark. You need a solution that will help you save money, prepare for power outages, and help the environment. Introducing the Generac Power Cell, a battery storage system that harnesses the power from the sun to help reduce your electric bill and provide backup power during utility power outages.
With the battery storage solution, we're saving about $450 a month.
PowerCell's revolutionary technology captures and stores electricity either from solar panels or the electrical grid. It allows you to use stored energy during peak demand times when electricity costs are high, which helps reduce your electric bill, saving you money. And when a power outage occurs, PowerCell is ready to supply backup power to your home. PowerCell's modular design allows for easy customization for any home or budget. And PowerCell is backed with a 10-year limited warranty.
It was a simple installation, very neatly installed. It was done very quickly and efficiently. Since installing our power system, we've been experiencing a savings of $1,500 a year.
Generac has been a trusted provider of backup power solutions since 1959 and provides 24/7 customer support.
The battery storage solution in combination with the solar has been one of the best investments we've ever made.
Special financing is available with low monthly payment options. You will likely qualify for tax credits and energy rebates, which could save you up to 30%, adding to the savings you'll enjoy over time with PowerCell. Call now to schedule a free in-home assessment. The call is free, the assessment is free, and there's no obligation to buy. Act now to receive PowerView, Generac's home energy monitoring system, a $300 value. With PowerView, easily keep tabs on your energy consumption, monitor your battery usage, and track your savings. Don't wait. Call or go online now. PowerCell. Savings powered by the sun.
Analysis and first trading action after the latest numbers from retail and entertainment giant Amazon. Where is the company delivering for investors? Squawk on the Street today, 9 a.m. Eastern. Watch or listen live on the CNBC app.
A very good morning, everybody. Welcome to this Brexit Day special. You're watching Street Signs, and I'm Jeff Cutmore.
And I'm Joanna Bersecci, and these are your headlines.
So we are in the final hours of UK membership of the EU. The countdown has begun. Officially less than 14 hours to go now until the UK leaves the European Union following a 53-year membership in the bloc, with the British government due to hold celebrations around the country to mark the day. Meanwhile, Brexit Party MEPs make a cheerful departure from the European Parliament for the last time, to the tune of bagpipes and waving Leave umbrellas.
And Hong Kong shuts up to 30% of its bank branches amid the coronavirus outbreak after the WHO declares a health emergency. But stocks rise as it stops short of issuing a travel ban on China. And Amazon crushes fourth quarter expectations, sending shares sharply higher in after-hours trade on the back of record Prime subscriptions and growth in its cloud business. Well, it is Brexit Day, but we're also following the outbreak of coronavirus very, very closely. And I just want to bring you some comments now from the Chief Medical Officer in England. And they are saying that they have confirmed 2 cases of coronavirus in the UK. The Chief Medical Officer says patients are receiving specialist medical care using tried and tested procedures to prevent further spread. They have also said that 2 patients are members of the same family. So we now have 2 confirmed cases of coronavirus in the UK. We'll be keeping a close eye on this story and to see how things evolve from here, but now confirmed in the UK as well. All right, let me take you to how European markets are faring this morning. More broadly, as I mentioned, it is Brexit Day, so Brexit will be happening at 11 p.m. tonight, local time. FTSE 100, all eyes on that particular index, down 0.4 percentage point. But to be honest, a lot of the movement there has been driven by underperformance from the miners, Antofagasta, Glencore, and so forth. Those are the stocks that have exposure to China, as we've been talking about. Up at the top, we do have some of the defensive stocks in the UK. Worth mentioning that since the Brexit referendum, the FTSE 100 is up about 16% in dollar terms. ZDX and CAC 40 trading around the flat line. CAC 40, we had the initial GDP estimate for the fourth quarter come in weaker than expectations a short while ago. So keep in mind that we will be getting the broader Eurozone GDP numbers in about half an hour's time. That will paint a picture for how the Eurozone economy is evolving more broadly. FTSE MIB on the back foot, down 0.8 percentage point. Switching to currency markets, and I guess the number one focus is going to be on the pound today. We have it trading stronger. 131.13 is where we're at, about 0.1 percentage point firmer. And a lot of the uptick we've seen in the last 24 hours is on back of the slightly more hawkish Bank of England. No cuts yesterday, no change in the voting split, and still pointing towards modest tightening. So that came as somewhat of a surprise and has been giving a floor to the currency pair. Euro trading mildly weaker. 110.30 is where we're at. Remember, we do have those GDP numbers to watch out for, and some of the safe havens are coming off versus the dollar. As for U.S. futures, a quick look at how things are faring up there. Yesterday, we did have a turnaround in sentiment with the 3 majors ending up in positive territory. Very strong results out of the tech sector, Microsoft and Amazon after Bell. Very, very strong performance there, up north of 10%. But you can see that all 3 majors, the 2 majors, S&P and Dow, are seen opening up weaker today. NASDAQ, as I mentioned, a little bit higher on back of those Amazon blowout results. We'll talk more about that shortly as well. Now, HSBC shares are lower after announcing that 24 service outlets in Hong Kong will be suspended temporarily after February the 3rd. The announcement comes after Hong Kong's Monetary Authority announced that between 20 to 30% of bank branches are expected to be temporarily closed due to concerns over the coronavirus. And Air France-KLM has suspended its flights to China amid the ongoing coronavirus outbreak. The airline joins the likes of Lufthansa, Scandinavian Airlines, Virgin Atlantic, and British Airways in halting flights to the country. Cabin crew unions reportedly demanded the move amid concerns over employees being exposed to the virus. Meanwhile, Italy has halted all air traffic with China. This after Rome confirmed 2 cases of coronavirus, becoming the 4th European country to do so, following Germany, France, and Finland. And of course, UK, as we just heard a short while ago, first 2 confirmed cases in England as well. Italian Prime Minister Giuseppe Conte announced that 2 Chinese tourists have tested positive for the infectious disease. The news comes after 6,000 tourists were held on a cruise ship off the coast of Italy over fears that one ill passenger had contracted the deadly virus. The ship's operator, Costa Cruises, has since revealed that the 54-year-old Chinese woman was diagnosed with the common flu. So lots of cases of coronavirus going around and also spreading to Europe, as we've just been talking about. Let's get out to Jim O'Neill, chair of Chatham House, ex-chair of GSAM, who joins us over the phone. Sir, I actually just want to start out by asking you about coronavirus. And I know that in one of your previous jobs, in your old hats, you worked as an advisor to the government with David Cameron, and you did a lot of work on infectious diseases. Can I just ask you, in your esteemed view, whether or not you think the measures announced by China and the authorities so far are going to be enough to contain the spread of this virus?
I mean, my honest answer, I've got no idea, and I'm pretty sure nobody else really does. And obviously the WHO and absolute, truly specialist health bodies are making educated and informed guesses. From how I interpret them with my knowledge and my own experience, I think there's a strong view that the Chinese are doing the best they can, although they were probably a little bit late to acknowledge and recognize it. But the problem is, of course, and linked to the core problem about antibiotic resistance, and it may be a sign of things to come in the future if we don't solve the failing market for antibiotics, because there's no vaccine right now that can deal with coronavirus, and it won't be till probably the summer till one, and that's with hurried efforts by all sorts of people around the world to try and find one. So we got to hope that with the aggressive measures the Chinese are doing to shut down Wuhan and essentially restrict Chinese travel all over the world, that this thing can be brought under control. Otherwise, it's going to be very problematic.
And indeed, it's something that the world is watching very closely. As you say, no one has a lot of clarity, but certainly we are seeing some economists begin to revise downwards their expectations of growth in the near future. Speaking about economic growth, sir, I want to ask you about the UK. Of course, it is Brexit Day today. And yesterday, the Bank of England put out a projection of where they estimate ultimate trend growth of the UK to end up. And it was very close to 1%, around 1.1%, much lower than what it was in previous years, north of 2.5%. Do you think that Brexit has led to a permanent supply shock to the UK economy?
Not necessarily. I can understand why the bank's done it, but to be honest, it's a bit like many others have been expecting this productivity bounce for years, and they've just essentially abandoned the idea. And in that sense, Brexit is a very convenient thing to cite. But as big as the Brexit issue is, and it's not a decision that I thought we should have taken, but it is what it is. I don't know why people think it's a bit controversial, but this is nowhere near the most important thing for the future of Britain's productivity and therefore its growth. In the decade or so since the crisis, our productivity is down an accumulative 20% to what it was before, and so being.
All right, it seems like we have lost Jim O'Neill. We will try to get him back in just a few moments. That was Jim O'Neill, the chair of Chatham House and ex-chair of GSAM as well. In the meantime, let's get back out to Jeff in Westminster.
Yeah, fascinating comments there about what will actually drive UK growth at this point. One of the things that we're quite good at is pomp and ceremony, and we saw a little bit of that, didn't we, over at the European Parliament. So let's just talk about that. MEPs ceremoniously parading themselves out of the European Parliament in the last hour, making their last representation of the United Kingdom within the EU. Just one of the Brexit Day festivities, Union Jack colours lighting up Brussels main square last night to highlight Britain's formal departure from the EU at midnight CET. Of course, the UK will continue to obey EU rules for the time being. There is this 11-month transition period that will now take place. as we reset our relationship here in the UK with the rest of continental Europe and the EU. Let's get out to Sylvia in Brussels for more on how that's going to happen.
So, Jeff, let's talk for a while about fisheries, because this is going to be one of the most controversial issues as we head to the next phase of the Brexit process. So let's understand why. Essentially, European vessels are allowed to work in all of the European Union. So this means that French fishermen can work in UK waters and vice versa. The problem that's emerging at this stage is that the UK wants to end that reciprocal access, and that is raising concerns in many coastal towns across the EU. And so yesterday I asked Sean O'Donoghue, he's a representative from the European Fisheries Alliance, and he told me what are the specific concerns of Irish fishermen as we head to the next phase. Let's take a listen.
They're extremely concerned about this and have been since the vote for leaving was done in 2016, and they're a big problem. And this applies to my European counterparts as well. Is that we are dependent on access into the UK waters for two of our main species, which are mackerel and Dublin Bay prawns, or nephrops as we call them. And our industry overall is 30% dependent on access to UK waters. So if the UK deny us access, coastal peripheral areas like Killybegs in County Donegal, which is 98% dependent or 90% dependent on fishing, would be decimated in a matter of years if we didn't get this sorted out. So we have been screaming from the rooftops, and to be honest, we've got some success both from an Irish point of view and from an EU heads as well, that fisheries will not be isolated in the trade negotiations.
So the European Union wants to address this issue about fisheries. At the same time, they talked about financial services, they talked about data privacy and security as well. So they don't want to exclude any subject at this stage. They want everything to be done at the same time. But for the time being, let me mention some of the practical changes that we're witnessing here in Brussels. So we saw some British lawmakers leaving the European Parliament for the last time earlier this morning, and we're yet to see the Union Jack flag being removed from outside the European Parliament later today to then be put in one of the European museums here in Brussels. In a few moments' time, we're also likely to hear from the President of the European Commission, Ursula von der Leyen. She will be addressing journalists, and she will be talking about the future of the European Union. So let's see, guys, how the future of the EU is going to look like now with 27 members.
All right. Thank you, Sylvia, for bringing us the latest from Brussels. And meanwhile, Irish Prime Minister Leo Varadkar is delivering a speech in Dublin to outline the future after Brexit. Let's listen in.
As for us, I'm ambitious about the future EU-UK relationship, but I also think we need to be realistic about the dangers. We need to start this new relationship between the EU and the UK on a firm and honest footing, and that means a level playing field. This is very much in Ireland's interests, as well as that of the Union as a whole. So what does level playing field mean? It means common minimum standards on workers' rights, health and safety, the environment, animal welfare, crucially state aids, as well as product and food standards, and has been the European norm, minimum standards that rise over time, not fall. I think this morning is an opportunity for all of us to remember what Europe stands for and where we go from here. The idea of Europe has always been inspired by a spirit of optimism and a belief in a better future. Europe allowed us here in Ireland to take our place among the nations of the world. So today is bittersweet for all of us who believe in the idea of a united Europe. Our sadness, however, is tempered by what we have seen over the past 3 years. And although the European Union has been tested in the past decade by the rise of populism, the financial crisis and Brexit, it did not break. And in fact, in my view, has come through stronger and more united than ever. Today, we're particularly grateful to the European member states for their solidarity and support during the recent Brexit negotiations. And I'm glad to see some EU ambassadors here today, and I hope you'll convey our words of thanks back to your capitals. What we saw over the past 3 years is proof positive that small countries benefit from membership of the European Union. We don't get swallowed up.
That is Leo Varadkar delivering a speech on the day of Brexit, talking about mixed emotions now that the UK will be formally leaving the EU as of 11 p.m. tonight. So we'll keep an eye out for any flashes that come out of that. Let's get back out to Jim O'Neill, the chair of Chatham House and ex-chair of GSAM, who joins us over the phone. And sir, our line just got cut a short while ago, but you were talking to us about the productivity challenge that you think is facing the UK economy over the next couple of years. And I think where we left you was where you said that we have seen a 20% productivity hit to this economy. What type of measures would you like to see out of the government here to help get that productivity number back up again, especially now that more than ever the UK is going to need a boost from somewhere, given that its trading relationship is fundamentally going to change with the rest of the world?
So relating it directly to where you started the question from with the bank, I'm a bit baffled that the bank personally was even considering cutting rates, because we've seen clear evidence anecdotally from the London housing market through to PMIs that there's a bounce in the economy, and crucially, and linked to this question, and something else which is a major part of my life, it looks very likely that in the March budget we're going to get a very expansionary fiscal policy, quite a lot of which is going to be geared around specific measures to help the north of England and the Midlands in particular, areas which have the weakest productivity in the UK and have not only been at the core of the problem of the past decade, but one for decades before. And as complex and as tricky as all these things are for British people, if the shock to the establishment of leaving the EU forces British policymaking to deal with these inequalities and the skills and education and infrastructure challenge in a much bigger way than we've done for most of my professional lifetime, then we might end up being able to make something out of this mess we've created for ourselves. So I'm surprised at the tone of the bank, and they might be right about the long-term trend of the economy being weaker, but I'm not sure now is the greatest time to have made that particular call.
Certainly got a lot of attention. But, coming back to what you were saying about investment and investment in infrastructure, connectivity to northern parts of the UK, HS2 is a very good example of that. Initially, everyone was behind it, but then the cost started going up, timeline is slipping. I mean, do you think that this is a project that the government should still go ahead and push through, given the mounting costs, or are there more efficient ways of creating productivity and connectivity in this country?
No, I think it's quite well known that I believe something called Northern Powerhouse Rail, which is connecting the very closely geographic located cities of Manchester, Leeds, Liverpool, and others between them, it is clearly a hugely important thing for having a permanent productivity boosting impact on the north. That is the bit which is crucial, and I think the way HS2 is going to have to now develop is that the second phase will have to tie in very centrally to that. And whilst in itself the HS2 project I don't think will directly boost productivity dramatically, along with Northern Powerhouse Rail it will. And more broadly, given that £9 billion nearly has been spent on HS2 already, and it's been going for 10 years, I don't really see how the government could cancel it, because no infrastructure investor or no northern politicians would ever take anything the government said again, any government, about big infrastructure projects going forward seriously. So yes, it is a lot of money, but I think it should be thought about as a conduit and a hub for much other, in my view, important things like Northern Powerhouse Rail.
All right, well, I would love to continue the conversation, sir, but I'm afraid we're going to have to leave it there. Thank you very much for chatting to us on this very important, historic day, UK leaving the EU, Brexit Day. Jim O'Neill, chair of Chatham House and ex-chair of GSAM. And stay with us, because also coming up in just a few moments, Amazon's gamble pays off. Find out what's behind the tech giant smashing expectations after the break.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen, healthier brain, better life.
Introducing a razor that works differently. The Gillette Skin Guard has a guard between the blades that helps protect skin. The Gillette Skin Guard.
Hi, Phil Swift here. People everywhere tell me how much they love the Flex Seal family of products.
This stuff is awesome. It really works.
Best stuff ever got. Nothing compares to the strength of original Flex Seal. Flex Seal Liquid, Flex Shot, Flex Tape, and Flex Glue. Use the Flex Seal family of products to weatherproof and protect virtually everything. Seal up gaps, cracks, and holes, even make quick repairs underwater. And don't forget about our portable Flex Seal Minis. Flex Minis easily fit in your toolbox or glove compartment, making them perfect for quick repairs on the go. All Flex Seal products create a super strong watertight barrier. Patch busted pipes, seal gushing gutters. Now you can coat, patch, seal, and repair. Imagine everything you could do with the Flex Seal family of products. Available at these fine retailers.
Do you worry about going to the dentist? After all, a visit to the dentist can easily cost $2,000 or more. Well, relax. The Carefree Dental Card is now available in your area. Call now and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. Activate your card and you can start using it immediately. From exams and cleanings to more expensive procedures like crowns, dentures, even braces, they're all included with the Carefree Dental Card. Say you go to the dentist today without any card and your bill is, well, ouch. Wait a minute, let's try that again. You go to the dentist today and show your Carefree Dental Card, you save $525. The Carefree Dental Card is just $15.95 a month, so call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit. Call 1-800-478-0809 now.
On Squawk Box, inside the latest numbers from retail, cloud, and devices titan Amazon. How did holiday deals boost the bottom line? Today, 6 a.m. Eastern on Squawk Box. Watch or listen live on the CNBC app.
All right, welcome back to the show. Well, some breaking news out of the Italian government. They have set to declare a state of national emergency after confirming first 2 cases of coronavirus in the country. That is a cabinet statement. Chris, I just want to get back to you. Earlier, you talked about this being a potential buying opportunity in the market. Where are you seeing the buying opportunities now?
Well, I think equities are providing opportunities. I think this could be a very good year for equities globally. So in that case, there's sort of the reason for people to take profits the excuse has been the coronavirus. That worries people a bit. So that creates an opportunity. But I also think the UK in particular is very interesting because cyclically the economy seems to be accelerating. All the bad news of Brexit is largely priced in. The currency is very cheap. The equity market is very cheap.
You like the UK market here?
I think the UK market's interesting, and the economy looks good as well. So yeah, I think it's a great. If someone said to me, "You've got to buy something, put it away for 5 years," I think the UK stock market is the place to put your money.
Very positive take then. I like it, especially on Brexit Day. Chris, thank you very much for your interventions at the last half hour or so. Very quick look at European markets. We have Stock 600 trading slightly below the flat line, almost a 1/10 of a percentage point weaker. And switching to the FTSE 100, big day in the UK, but also trading on the back foot today. The FTSE 100 will bring that up just shortly. And right at the bottom there, we have some of the names that have exposure to mainland China. U.S. futures are looking somewhat mixed, but a big day for tech coming up. That is it for Street Signs, though. I'm Giovanna Versace. Worldwide Exchange is coming up in just a few moments.
Power outages can be unpredictable, inconvenient, and disruptive to your life, posing a real threat to your comfort and safety. When the power goes out, you have no lights, no refrigeration, no heating or air conditioning. Your well or sump pump won't work. Your modern daily electronics are rendered useless. And what if the power's out for days or weeks? Are you prepared? You can be with a Generac home standby generator.
24 days we were without power. I had water, I had ice, I had coffee, I had air conditioner. I was able to stay here because of Generac.
When an outage occurs, your Generac home standby generator automatically powers up, so your life goes on without disruption. You and your family are comfortable, safe, and secure. Generac generators run on your home's existing natural gas or propane. And Generac's standard Mobile Link remote monitoring system keeps you posted on operating status, maintenance updates, and more. Generac generators are designed, engineered, and purpose-built in the USA. Generac is the #1 manufacturer of home standby generators in the world. 8 out of 10 home generators are Generac, with thousands of satisfied customers.
Very good product. Very, very good reviews from everybody.
Prices start at just $19.99, and special financing is available with surprisingly affordable monthly payments. Call now to schedule your free in-home assessment with one of Generac's 6,000 nationwide dealers. The call is free, the assessment is free, and there's no obligation to buy. Plus, if you act now, you'll receive a 10-year extended warranty absolutely free. That's a $995 value. Call now, so the next time there's a power outage, your home powers up. Power your life with Generac. Call or go online to schedule your free in-home assessment today.
We got one of those new purple mattresses, and it is amazing. You have to try it.
Oh, this doesn't feel like memory foam.
No.
This feels amazing.
Right?
What is it?
Actually, it's called Purple, and it's a completely unique comfort technology, meticulously designed to cradle and support the human body.
Cool.
Take advantage of Purple's Snore and 20 sale and get free Purple sheets and a premium sleep mask when you buy any Purple mattress.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
It is the biggest week of earnings, with half of the Dow and a third of the S&P set to report.
Boeing is reporting its first annual net loss since 1997.
I believe in this airplane. I believe in the engineering of it.
We've closed over half of our stores in China, and it is a very dynamic situation.
We are estimating that we're going to grow 28 to 30%.
This company's a juggernaut. iPhone beats, wearables up 44%.
It is an earnings abundanza.
Watch or listen to CNBC live on the app.
Good morning. It's 5 a.m. at CNBC Global Headquarters. Here is your 5 at 5. Investors on edge as coronavirus fears continue to weigh on Wall Street. Earnings delivered, Amazon crushing expectations for its most recent quarter as Jeff Bezos' personal fortune swells to new heights. And the end of an era at IBM after longtime chief Jenny Rometty says she is stepping down. The day has come. Brexit is finally a reality for millions of Britons. We are live in London with the very latest, and less than 72 hours to Super Bowl 54. Our own Eric Chemmy's been on the ground in Miami, putting a CNBC spin on the pregame warm-ups. It's Friday, January 31st, 2020. Worldwide Exchange begins right now.
Welcome to Miami.
Good morning and welcome. I'm Courtney Reagan in This Morning for Brian Sullivan. We kick off this morning with some breaking news. The latest figures on EU economic growth hitting the tape. Giuliana Bercetti joins us now from London. Giuliana.
That's right, Courtney. The numbers have just come through for the Eurozone fourth quarter GDP estimate, coming in at 0.1% quarter-on-quarter, slightly below the consensus estimate of 0.2%, bringing the full year growth to 1%, again, weaker than the consensus of 1.1%. I just want to also point out that some of the big disappointments we've seen this morning are out of Italy, down minus 0.3% for the fourth quarter, France down 0.1% for the fourth quarter as well. So those two countries are really the ones that are in focus. We don't have the German GDP number yet. In terms of market reaction, we are seeing a little bit of softness in European equity markets. The Stock 600 has dipped below the flat line. You can see that is a full picture of the European bourses across the board. Remember, it is a big day in the UK. However, with the Brexit day, all the focus has been on the FTSE 100. But for the Eurozone as a whole, the fourth quarter GDP readings so far don't give a lot of comfort.
Thank you very much, Shamana, for those numbers. And following the GDP numbers out of Europe, here's how stock futures here in the U.S. are shaping up on this Friday morning. A bit of a deceleration in the Dow Jones Industrial Average, indicating a lower open by 130 points. And this after the Dow staged a pretty late day rally yesterday to ultimately erase more than 200-point loss that we saw midday in trading. The major averages are now all on pace for their fifth positive month in a row. Let's get a quick check on the bond market and see how things are shaking out there. The yield on the 10-year ticking just a tiny bit higher today at 1.563%. The 2-year at 1.395%. And a quick check in on Asia, as mainland China, remember, remains closed for the Lunar New Year. But of course, we did see some movement around the world there in overseas trading. India down about 0.5%. Japanese Nikkei was higher. To earnings now, we've got a big one for you. Amazon shares are climbing aftermarket and pre-market here this morning. After crushing expectations for the fourth quarter, the company's market cap surging above $1 trillion for the first time in after-hours trading. You can see we're higher by almost 9% right now. Key numbers include cloud, much faster growing than expected. Prime memberships topping 150 million for the first time, we think. We don't always get those numbers. And on the news, CEO Jeff Bezos' net worth ticks up another $13.2 billion to more than $129 billion. CNBC's Arjun Karpal joins us now with more. Hi, Arjun.
Hi, Courtney. And it was interesting because Jeff Bezos and Amazon are masters at managing market expectations. They went into this saying, look, we're investing more and more in shipping and Prime. And then they pulled these numbers out the bag. And what you saw was that key e-commerce business performed very strongly. Prime, more people joined in Q4 than ever before. They said, even though the costs associated to shipping did jump up, the margins for that business didn't fall as much as the market expected. And that helped as well. And of course, moving on to that cloud business, Amazon Web Services revenue was up 34%. That is a slowdown from what we have seen in previous quarters, but again, beating market expectation despite competition from the likes of Microsoft and others as well. And even though it's still just at about 11-12% of revenue, it still counts for about 66% of the company's overall operating profit. So that really is the cash cow. And for it to be performing strongly is something that the market certainly welcome. And in another part of the business, you saw the ad business also jump up plus 41% revenue growth as well. So it looks like right now, Amazon firing on all cylinders.
Absolutely. What a report. There's a lot of different silos, of course, to look at. Thank you for bringing us some of those latest. And in a developing story, IBM says its longtime CEO, Jenny Rometty, is stepping down. Effective April 6th, she'll be replaced by Arvind Krishna. The stock popping on the news and extended trading. Well, Arjun, what else can you tell us about this news?
Well, she oversaw IBM during a pretty turbulent time since she took over in 2012. The tech landscape shifted. She sold off the company's low-end server business, made cloud services a priority, but still under her tenure, the share price was down around 25%. They've struggled in this new age of cloud computing, Microsoft and Amazon really dominating that market. So it's interesting to look at Arvind Krishna, the new CEO, where he's come from. He was the SVP of the cloud and cognitive software business at IBM, and that gives us really a sense of where IBM's looking at the future of cloud. But there's a lot of big tasks on his hand. He has to figure out where IBM's going to fit in this landscape, as I mentioned, dominated by Amazon and Microsoft right now, where they can find new technology and where perhaps they just need to cut their losses and exit from. Those are the big tasks that Arvind Krishna faces as he takes over IBM. A big job on his hands right now, Courtney.
And Arjun, of course, this is not happening until April 6th, and Ms. Rometty is not leaving entirely. She's sticking around a bit, I believe, in a chairman role. Is that right?
That's right. She's sticking around in a chairman role. And I think that's important because she's got that experience. She's been in the job for a number of years. And so I think the two of them together, that partnership could really help the company moving forward as they navigate this tricky time in the tech landscape right now.
Got it. And I think Mr. Krishna has something like 13 or 15 patents, which is also pretty interesting. He sounds like a very smart guy. Thank you very much, Arjun. We're going to get back to the broader markets as stocks are searching for a direction after a pretty wild week for investors, admittedly. Wall Street is, of course, looking ahead to another busy week of earnings as well. More than 80 S&P companies will be set to report, including Dow components Disney and Merck. Coronavirus fears, though, continue to be a major overhang. The death toll climbs past 200, this as of overnight numbers, and the State Department here is now urging Americans to avoid travel to China. The infection rate in the U.S. ticking up by 1 to a total of 6 cases confirmed as well. And earlier this morning, the U.K. confirmed its first cases. This, says Goldman Sachs, says the virus could shave 0.4% from U.S. first quarter GDP growth. For more, I'm joined by Mike Bell. He's global market strategist at J.P. Morgan Asset Management. Mike, so Goldman is now sticking their neck out, putting a number on it, shaving off as much as 0.4% from first quarter GDP. What do you make of that estimate? Do you think that this could hang around for a little bit longer than perhaps initially thought?
I think it's extremely difficult to guess, really, at the moment, the extent to which the virus is going to impact growth. It's obviously going to depend on the extent to which it spreads and the extent to which it impacts consumer confidence. We saw the consumer confidence data in the last week or so actually picking up. So the fundamentals at the moment look okay. We'll be watching the data very carefully to see, though, whether any of that changes based on this outbreak.
And we did just get some new updated numbers for U.S. economic growth, 2.1% in the fourth quarter. That was, though, the slowest pace in 3 years. Do you think that we're heading for a bit of slower growth ahead, if not, or stabilization on the optimistic side?
I'd say 2 good pieces of news we've seen in the last month or so. Firstly, that pickup in consumer confidence that I just mentioned, but also the non-manufacturing part of the Institute for Supply Management survey has picked up quite a bit in the last few months, reducing that risk of economic slowdown that was looking more of a risk 3 or 4 months ago. On the downside, we're still not seeing a material reacceleration in the Conference Board's leading economic indicator. And you've not seen the manufacturing sector pick up. So our focus will be on the ISM manufacturing survey early next week and whether we get a further sign of pickup there, and then whether that translates through into that Conference Board leading economic indicator actually starting to reaccelerate.
It seems like trade is something that at least we're less worried about than perhaps we were before, as we have maybe at least let's call it a truce at this point between the U.S. and China. But this is 2020, which means it's an election year. The Iowa caucuses are right around the corner, and it seems that polls indicate Bernie Sanders is getting more and more of the poll voting at the very least. Is this something that market investors should be concerned about? Because many of his policies don't seem to be things that line up necessarily with the free market capitalist way of thinking.
I think what the market assumes at the moment is that were you to have a candidate that perhaps has some policies that could shake the market, it's relatively unlikely that they would have the full backing of a Democrat Congress in terms of getting the Senate and the House of Representatives, and that therefore they might struggle to push through some of those policies that could shake the market. So I think that assumption is what is keeping the market relatively healthy at the moment. Were that assumption to be shaken, then I think things could become a little bit more tricky. But for the moment, we think it's relatively unlikely that the Democrats would take both the House and the Senate.
Okay. Well, Mike Bell, we don't want you to go too far because we're going to talk to you about Brexit in just a few minutes, so stick with us. When we come back, we are live in London, where after years of waiting, the UK is finally set to leave the European Union. A live report on the ground, plus reaction from Mike Bell. That's next. And talk about rubbing salt in a wound, how Tesla continues to put Ford and General Motors to shame when it comes to share price. And later, why the energy bulls are out in full force ahead of some key earnings reports. A very busy hour is still ahead. Worldwide Exchange will be right back.
Sun comes up and sun goes down. Can I find an investment firm that has a truly long-term view? It begins by being privately owned, with more than 85 years of experience over multiple market cycles. With portfolio managers who are encouraged to do what's right over what's popular.
focused on helping me achieve my investors' unique goals. Can I find an investment firm that gets long-term the way I do? With Capital Group, I can. Talk to your advisor or consultant for investment risks and information.
The world's newest ocean cruise line is yet again a world's best. Viking's elegant ships deliver a superb, inclusive experience with enriching shore excursions, alternative dining, all-veranda staterooms, Wi-Fi, and much more. We're very proud to have been named a world's best 4 years in a row by Travel and Leisure readers. Learn more at vikingcruises.com.
It's time to get invested!
I pledge.
I pledge.
This is the year.
I get invested.
Are you ready to take a stand and invest in the things that matter most to you?
My retirement.
Student loan debt.
A better life.
For my American dream.
My American dream. Get invested.
Share your voice. Take the pledge. Get invested.
The time is now. Now. This is my pledge.
My pledge.
My pledge. Get invested.
Invested.
Go to cnbc.com/invested now to take the pledge. Booyah!
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Save 50% and subscribe to The Telegraph as Britain embarks on a bright new future. Treat yourself to a standard digital subscription in our Brexit sale. Pay just £25 for your first 6 months of intelligent insight and trusted opinion. Subscribe today at telegraph.co.uk.
Well, the day has arrived. The UK set to leave the European Union in just about 13 hours from now. The culminations of years of voting, debates, and protests come to a head today. CNBC's Steve Sedgwick joins us now from London. Hi, Steve.
Hi, Courtney, and what is quite extraordinary is despite the hundreds of thousands we've seen on the streets of London over the last couple of years, for Brexit, against Brexit, huge heated debate in the House of Parliament behind me. Actually, it's very calm here. Now the day has come. In fact, incredibly limited amount of support still for the EU and indeed for the Brexiteers as well. There's supposed to be a couple of parties later on from both camps, but quite frankly, I don't know if the organisers are expecting that much from either of these demonstrations. You can see behind me, Big Ben looking pretty forlorn, actually. There was a campaign to get a crowdfunding together for Bunger Bob for Big Bang Bongs on Brexit. Yes, believe it or not, that's alliteration for you. But it never happened. There was supposed to be a big party in Parliament Square, but there's no fireworks allowed, no alcohol. This is a no alcohol zone, so I'm not quite sure what kind of party it's going to be. We've got some Remainers remaining here as well, saying we'll be back. You can see flying the flag of the EU. But quite frankly, Parliament has seen much bigger demonstrations over the years, including, of course, famously behind me here, the Trump baby blimp being flown here in Parliament Square. We've got Sam here, though. Good morning to you, Sam. Hi. Sam's got these amazing apples. Look at these. Look, with a Union Jack plaster on them. And on the other side, it says Eos. Now, Eos, apparently, Courtney, it is the goddess of dawn. So the British Pears and Apples Association are hoping for a new dawn from this as well. But quite frankly, as I say, now the day has actually come. Those huge hundreds of thousands of demonstrators we saw on the streets back in October and the big hand-wringing we saw over the election back in December, it's all in the dim and distant past. In fact, apart from this wonderful crowd of about 100 tourists around me, quite frankly, I'm just going to eat my apple, Courtney.
Thank you very much, Steve. I love all of that. That's a lot of symbolism. There's been an awful lot of action in the last several years. You've had a couple prime ministers. Now we've got Boris Johnson. What are his plans today?
Well, Boris Johnson is doing what he promised in the general election. I'll just park my apple just for one moment. Thank you, Sam. See, what happened was, in the election, he promised to take a lot more devolution up north, to the north of England, which there was this red wall of Labour seats, which on the election night crumbled before the Tory onslaught as well. And one of the first places to declare Brexit back in 2016, Courtney, was a place called Sunderland in the northeast of England, a place which it feels needed a new impetus from somewhere, and they hope that Brexit would give it to them. So Boris Johnson is having what's called an away day for the UK cabinet today in Sunderland, which is a Brexit community. He's taken it up there And later on, he's going to deliver a message to the nation about the vitality which he thinks the UK can exhibit here on in. And then apparently down in Downing Street, he's going to have a private gathering for friends and colleagues as well. And I'm told the red, white and blue of the Union Jack, not just of the Stars and Stripes, will be portrayed across Downing Street, and the symbolism goes on. That will be at 11 p.m, which is actually our Brexit time, because, of course, that is 12 Central European time, Courtney.
Very big day. Steve, thank you so much for joining us and running through all of that with us. Well, JP Morgan Asset Management Global Market Strategist Mike Bell, he is still with us. Mike, so I'm sure you probably heard Steve. He gave us some of the nuts and bolts. As we bring it back home here to the U.S., what's key for U.S. investors to understand about what Brexit really means when we're talking about the economies of all of these different European nations and here our trade deal with the UK?
I think the most important thing to understand is that this evening nothing will really change, because the UK enters into a transition period now lasting to the end of this year. For all intents and purposes, the practical trade arrangements will remain the same as they have been until the end of this year, whilst the UK tries to negotiate a new free trade arrangement with the EU. So in practical terms, the actual deadline to be thinking about is the end of 2020, when the transition period is scheduled to come to an end, rather than today.
And so then what would happen if nothing significantly happens now? Then what is sort of the next tentpole for us to understand as investors for what we should be watching when something does markedly change?
Yeah, well, I think 2 points. Firstly, what you have seen is in the last month or so, various different data points in the UK have picked up quite meaningfully. So you've seen business sentiment surveys, measures of the housing market and consumer confidence then in the last couple of days picking up. So it does seem like we're seeing a bit of a pickup in sentiment across the UK economy at the moment. You're also going to get fiscal spending come through in the UK. So the government are going to be spending more, reversing some of the decade of austerity that has dragged on UK growth. So I think all else equal, the UK economy should be propped up a little bit over the coming months. In terms of where we go from here, it's all going to come down to what exactly the trade negotiations lead to. Okay. Can we maintain regulatory alignment both for manufacturing and for services, and therefore maintain free and easy trade or not?
Still an awful lot of questions, Mike Bell. Thank you for joining us. I'm sure we will have you back to talk about this as it progresses. Well, still on deck, Super Bowl fever has arrived, and we are putting the CNBC spin on the pregame coverage. Our Eric Chemi will be live in Miami with the latest.
Today's big number, $115.5 billion. That's how much Tesla's market cap grew to yesterday, making it 3.3 times bigger than Ford's market cap and nearly 2.5 times the size of GM's.
Every morning, bright and early, 17,000 Edward Jones financial advisors come to work with one goal in mind: to treat their individual investors like individuals, to know what's important to them, to be their champion.
Let's get started.
Edward Jones. It's time for investing to feel individual.
Imagine traveling hassle-free with your golf clubs. Now you can with ShipSticks.com. No more lugging your clubs through the airport or risk having your clubs lost or damaged by the airlines. Sending your own clubs ahead with ShipSticks.com makes it fast and easy to get to your golf destination. With just a few clicks or a phone call, we'll pick up and deliver your clubs on time, guaranteed, for as low as $39.99. ShipSticks.com saves you time and money. Make it simple. Make it ShipSticks.
Hiring is challenging, especially for a pivotal role. It definitely felt like we were looking for a needle in a haystack. So Dylan used ZipRecruiter. He posted his job, ZipRecruiter sent it to over 100 top job sites, and then matched his job with qualified candidates. We were very impressed with how quickly we had quality candidates apply through ZipRecruiter. It's very important that we choose the right people, and ZipRecruiter's been able to help us do that. ZipRecruiter, the smartest way to hire. Try it for free at ZipRecruiter.com/theprofit.
Imagine feeling fearless when you walk into the dentist. Imagine a mouthwash that strengthens your enamel while preventing cavities up to 70%. Act Anti-Cavity Rinse. For a confident feeling in your oral health, stop imagining. Start acting.
With SoFi, get your credit cards right by consolidating your credit card debt into one monthly payment. And get your interest rate right so you can save big. Get a no-fee personal loan up to $100K.
High speed goes zoom, 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 zoom. It's coming, 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 coming. Boom, boom, boom. High speed goes zoom, zoom.
Let's get a check on some of the big stocks on the move today. Visa reporting record profit in the first quarter as it processed more than $3 trillion in transactions, but revenue fell just short of estimates. And the company says revenue will be hit this year by incentives it provides to banking clients. Visa has also been spending more on rewards and perks, pushing up operating costs by 14% in the quarter. Shares are down by more than 2%. Amgen's fourth quarter results beat expectations, but the company expects earnings this year to come in below Wall Street's estimates, due partly to accounting for its recent deal to take a 20% stake in a Chinese drug maker. Amgen also expects selling prices for its drugs to fall this year. Shares are down almost 4%. And shares of Western Digital, those are spiking today. The company reporting better than expected second quarter results and issuing upbeat third quarter guidance, helped by improving prices for memory chips. And Western Digital shares are higher by 5%. Well, still to come, the bull case for Amazon and why our next guest says this morning's pop could be just the tip of the iceberg for a stock that's already up 18% in the past 12 months. Plus, a new face in the driver's seat at Aston Martin. That stock zooming this morning. Details on Worldwide Exchange returns.
Yeah, that's her.
How'd you find out she was my great-great-grandma?
Smile.
Cheese. Mobile order.
Thank you.
How'd they know I wanted sprinkles? How did they do that? Whoa! How did you find your new house?
On Squawk Box, inside the latest numbers from retail, cloud, and devices titan Amazon. How did holiday deals boost the bottom line? Today, 6 a.m. Eastern on Squawk Box. Watch or listen live on the CNBC app.
Wondering which credit card is right for you? Introducing CNBC Select, the authority on all things credit cards. We do the research, you reap the rewards. Head on over to cnbc.com/select.
Save 50% and subscribe to The Telegraph as Britain embarks on a bright new future. Treat yourself to a standard digital subscription in our Brexit sale. Pay just £25 for your first 6 months of intelligent insight and trusted opinion. Subscribe today at telegraph.co.uk.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL. Every journey matters.
Whatever job you're searching for, you can find it on LinkedIn.
first jobs, flexible jobs. Keep me out the cold jobs. Advertising jobs, accounting jobs, HR, PR, even ER jobs. East London jobs, West London jobs, extra hour in bed jobs. Start-up jobs, late start jobs, get home in the daylight jobs. Banking jobs, building jobs, flexible working on a Friday jobs. Or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Wrapping up a wild week for Wall Street. Key themes to watch ahead of the open. Futures are mixed right now. The Dow is lower by 153 points. The Nasdaq, though, higher by 18. And alt meets hit Miami, where our own Eric Chemi checked in with the Chiefs and the 49ers players to hear their thoughts on the plant-based craze.
You'd be surprised. We got some big D linemen that are vegan, that, you know, they take advantage of the Impossible Burger, the Beyond Burger.
They provide it at our lunches on pretty much a daily basis.
I mean, I've never partaken any of the fake meat stuff.
I guess this is all personal preference, but it's actually pretty good.
I'm like 315 pounds. That's not what I'm about.
It's interesting in the chemicals and the way they make the meat. Very fascinating.
If it's over processed or if it's processed a lot, like, I'm probably not going to touch it.
I don't know too much research behind it, but taste-wise, it wasn't too bad, you know, on some tacos. So
vegan life is not for me. But the guys who do it, ain't nothing wrong with it.
I raise cattle, so that would be a mortal sin to eat a imitation burger patty.
My dental problems started as a child. Had a lot of cavities, root canals. Eating anything cold, it would hurt so bad. With dentures, they never fit properly. My confidence was really down. Always covering my face when I laughed. So I went in for a free consultation with Clear Choice.
People come in with bad teeth or no teeth, and in one day leave with the smile that they are looking for.
The Clear Choice one-day approach is making dental implants a reality for people all over the country who suffer from missing or failing teeth.
They put these beautiful teeth in my mouth, and I can eat ice cream. I can eat corn on the cob now.
With over 30,000 new smiles across our network, we're lifting spirits and confidence all over America. Schedule your free consultation today. We'll even talk about financing options.
I've never felt better than I do right now. It's the best thing I've ever done in my life for myself. Everybody tells me, you look 10 years younger. Thank you, Clear Choice.
Call Clear Choice today.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen, healthier brain, better life.
How's the IT department liking the Now platform?
Every time it takes care of something for us, we celebrate.
How often does... Got it.
ServiceNow, the smarter way to workflow.
Friction points, those obstacles that limit a company's growth. I try to find companies that turn these challenges into opportunities. It's these unique companies with creative business models that will generate value for our investors. That's why I go beyond the numbers.
Investors look to wrap up a wild week of trading as the coronavirus continues to hang over markets. We are live in Beijing with the latest. Also driving the markets this morning, shares of Amazon soaring after the company's huge earnings beat. And we're going to Miami for a preview of this weekend's Super Bowl matchup between the Chiefs and the 49ers as the second half of Worldwide Exchange rolls on. Welcome back to Worldwide Exchange. I'm Courtney Reagan in this morning for Brian Sullivan. Here's how stock futures are looking halfway through the hour. We are mixed. The Dow Jones Industrial Average, though, pointing to a lower open to the tune of 181 points right now. The Nasdaq, though, indicated slightly higher. Amazon helping the tech sector at the early going. And this is after the Dow staged a pretty late stage rally yesterday to erase a more than 200-point loss in midday trading. The major averages now all on pace for their fifth positive month in a row. Let's take a quick check at the bond market. Take a look at yields right now on the 10-year. We're under 1.6 still pretty firmly, 1.558%. The yield on the 2-year, 1.391%. We're going to get a quick check on Asian markets. Remember, mainland China, though, remains closed still for the Lunar New Year. We saw Japan trading higher, Hong Kong also markedly, well, I should say just slightly higher in trade. And we'll also see what's happening in early trade in Europe. Remember, the UK is preparing to leave the EU tonight at 11 p.m. local time in the UK. The FTSE 100, though, down about 0.8%. France is down about 0.5%, and Germany is off 0.4% on this Friday morning. We're going to get a quick look at some of our other top stories that we are following this morning. Kate Rogers is here with more. Hi, Kate.
Hey, Court. Good morning. Well, a California judge has ordered Johnson & Johnson to pay $344 million over a lawsuit involving the company's pelvic mesh. J&J and its Ethicon unit were sued in 2016 by then California Attorney General Kamala Harris. She's accused them of deceptively marketing surgical mesh devices as safe treatments in pelvic procedures in women. Johnson & Johnson has said it will appeal that decision. Volkswagen's truck unit has made a bid to take over Navistar. The company's offering $2.9 billion in an all-cash deal which would combine two of the world's largest truck makers. VW's unit already owns a nearly 17% stake in Navistar, which it says it will carefully review this proposal. And American Airlines and its mechanics union have struck a tentative contract deal. The $4.2 billion agreement covers more than 30,000 maintenance and service group employees. Union members must still approve that deal. Meanwhile, American Airlines Pilots Union has sued the company to immediately stop all flights to and from China amid the coronavirus outbreaks. The union is accusing the airline of negligently and intentionally exposing its members to the virus. Some strong words there.
Very strong words. And gosh, there's a lot going on in the airline industry right now.
Certainly.
Kate, thank you very much.
Thank you.
The coronavirus fears do continue to be a major overhang on the markets as well as the airlines. The death toll climbs past 200 as of overnight numbers. The State Department now urging Americans to avoid travel to China. The infection rate in the U.S. is ticking up by 1 to a total of 6. And the UK has confirmed its first case of the virus, saying 2 family members have tested positive. This as Goldman Sachs says the virus could shave 0.4% from U.S. first quarter GDP growth. Eunice Yoon joins us now from Beijing.
Thanks so much, Courtney. Well, what you're seeing behind me is really unusual. I'm currently at the Beijing train station, and it is almost entirely empty. This is unusual even for a normal day, but during the Lunar New Year holiday, it's almost unprecedented. And a lot of that is because the government authorities here have been imposing travel restrictions as well as other measures to try to stop the virus, which is making day-to-day life here quite challenging. For those of us living in China, wearing a mask is standard practice. It's not a government requirement outside of the virus epicenter of Wuhan, but nearly everyone has one on because they're fearful of catching the disease. Today was supposed to be the first day back after the Lunar New Year holiday when business would return to normal, but the government extended the holiday so most shops and restaurants are closed. Finding fresh produce has been a challenge. I'll show you. Here, there are a few vegetables and eggs. That's not so abnormal during the holiday, but because of the outbreak, people are eating at home and hoarding, so it's a lot worse. Masks are really hard to come by. I was here the other day and managed to find 3 for $31, but now there aren't any. I've been looking for hand sanitizer for well over a week. So far, I haven't found any, and the store clerk here says that she doesn't know when there's going to be more. This is one of the entrances to my apartment complex, but more and more housing estates, office buildings, and public areas are setting up barricades and temperature checks. This is the compound where the CNBC bureau is. I have to get a temperature check here, too. So my temperature was a little bit on the low side, but still normal. But if I had a fever, he would report me to the authorities. So just living here, you get a sense of the potential dire impact on the economy. And in fact, Goldman was just the latest to put out some new numbers where they're revising downwards their estimates for the full year for China from 5.9% growth to 5.5% growth. And they also believe that the U.S. economy is going to see an impact on the first quarter, but then they expect to see a rebound in the U.S. in the next quarter. So, Courtney, it shouldn't have too much of a net drag, they say, on the U.S. economy for the full year.
Very interesting, Eunice, to see inside of some of those shops as well, beyond the numbers, the real day-to-day life and what you all are dealing with when it comes to shortages of things like fresh produce, like you said, or hand sanitizer and masks. Eunice, you also, it's probably been about a week, I guess, since China announced that they were going to build that 1,000-bed hospital to help treat the growing number of infected. We were all blown away by how fast that they could build that. What can you tell us about the progress?
Well, there has been progress made, and in fact, CCTV, the state-run broadcaster, has been airing a time-lapse of the construction of the hospitals. There have been some reports that the second hospital actually is being built even more quickly than the first. Nothing has been completed as of yet, but the expectation is that by next week, the hospitals will be built and ready to try to ease the shortage of beds there in Wuhan, the epicenter of the outbreak.
Wow. Eunice, thank you so much. Have a good weekend. Well, let's talk more about the potential financial and economic impact of the coronavirus outbreak. I'm joined by Chris Meekins. He's healthcare policy analyst at Raymond James. Chris, thanks for being here with us. I understand you previously worked for the Department of Health and Human Services. You've dealt with things like this before. So if you're at the Health and Human Services Department right now, what's going on in your mind? What are you evaluating as this virus continues to spread?
Well, I'll say as someone who had to work on multiple public health emergencies, mainly dealing with hurricanes, that I'm thankful I'm not there now because they are also up at this hour and actively working 14, 16, 18-hour days. The most important thing is that the Chinese government really provide the information to the U.S. that they need to make educated public health decisions. So we need to know the exact number of people that have gotten the virus. We need to know the exact number of people who passed away from it. We need to really get the scientific data to know if it really does spread when someone has no symptoms. And once someone is supposedly no longer showing symptoms, can they spread the virus then? These are all questions we don't have answers to yet.
And so now in your new role, you're kind of taking a step further when you see some of these outbreaks and what it means to the financial and economic markets. Goldman Sachs is putting out a number, putting an estimate on things, thinking it'll shave 0.4% off of GDP. What do you make of that? Do you think that's too high? Do you think that's realistic, seeing as the number of dead and infected continues to grow?
I think it's too early to know exactly how significant the impact is going to be. But I think people are in the market are probably underappreciating how bad this is in China. We don't know when factories are going to reopen. We don't know when these travel restrictions are going to be lifted. During SARS, the CDC's travel advisory lasted 3 months, telling people not to go to China unless they really had to. So this is not a short-term, 1 week, 1 day, the Dow down 400 because they're worried about coronavirus. This is going to impact earnings for these companies in this quarter.
And so just very quickly, because we're out of time here, but SARS obviously happened in 2002, 2003. The global economy is now even more interconnected. So what you're talking about could have a bigger ripple effect now than what we saw then, even if we still don't know the extent of how long this could last. Is that what you're saying?
That's exactly what I'm saying. I think we don't fully appreciate how bad this is in China. And I think people are overappreciating how bad it's going to be in the U.S. U.S. is the global public health leader. I have confidence in the department and the people that are leading it now. So here, don't worry about it. No need to race out and get masks. In China, I think this is much bigger than the market even realizes.
Wow. Chris, thank you for joining us here. Please keep us updated as this continues to develop.
Thanks, Courtney.
Well, we're following the developing story this morning, and that IBM says its longtime CEO, Jenny Rometty, is stepping down effective April 6th. Rometty has served in that role since 2012. Avant Krishna has been tapped as her successor. IBM says Rometty will remain executive chairman through the end of the year. The stock popping on the news and extended trading, up right now by more than 3.5%. Well, to earnings, shares of Amazon getting a big pop after hours and here pre-market, jumping after the company reported earnings that smashed analyst expectations, showing a 21% gain in revenue year over year. Also, the company's market cap surging above $1 trillion for the first time in after-hours trading, shares higher by more than 8%. In the 15 minutes after the earnings hit the tape, CEO Jeff Bezos' net worth surged more than $13 billion, bringing the total to $129.5 billion. Joining me now on the CNBC Newsline is Eddie Ruma. He's managing director at KeyBank Capital Markets. Good morning, Ed. This was quite an impressive report. Obviously, we know Amazon has a number of silos, but if I could, let's focus on the retail part of it. This investment in one-day shipping really did appear to pay some dividends.
It absolutely did. And I think, look, we had a shorter holiday season, and I think when the consumer got to the later part of the holiday, they realized that they need those items in as fast as possible manner. And I think that's when this new one-day initiative really shone. So you saw Amazon taking share early because of promos and then taking share late, we think, because of those fast shipping times.
So I'm curious what your thoughts are on grocery. It seems to me that it's taken a bit of time to get off the ground compared to some of Amazon's other initiatives. And if you look at the physical store sales, which is mostly Whole Foods that we know that Amazon purchased, that was actually down, the physical store revenue, about 1%. But you think going forward, grocery is going to be key and pivotal to Amazon this year. Why?
Well, we think this is the big year of Amazon grocery. So part of it is the fact that Fresh is now free for Prime, so that's why you saw online grocery orders go up more than 2x. In terms of the Whole Food stores, we do wonder if delivery from store is causing some logistics issues. So we think that'll be an area of focus for Amazon. It does somewhat interfere, we think, with consumer shopping patterns as they're trying to shop, and you have people picking items. So there's clearly a better solution for that. But ultimately, with grocery such a big part of the U.S. economy, Amazon really needs this avenue to work as they continue to sustain their growth.
For so long, we talked so much about how Amazon was putting up impressive revenue and growing in that area, but it wasn't really growing the profitability. And everyone said, nope, they're going to turn that on when they need to and to prove that they can. And it does seem that they turned it on. They turned that profitability spigot on. Do you think this was sort of a blip to show, look, we can do it when we need to, but it may not be a continuing trend? Or is profitability at this level something that can be sustained from here for Amazon?
Look, I think, having covered Amazon for a while, you know that there are always going to be ebbs and flows from a profitability perspective. And I don't even know that they're so precise as to map it out quarter to quarter. But what I think the quarter does show is that, when the top line is as strong as it was, that the contribution margins are very powerful, and you can see this nice profitability. So, certainly expect a little bit more of a moderate first quarter, but clearly this quarter did show the power of Amazon's financial model.
I'd be remiss if I didn't ask you quickly about AWS. I know, Ed, typically you are covering the retail sector, and so that's why we stayed our focus there. But AWS, still very impressive, even as you see a company like Microsoft growing its gains in the cloud.
Well, there's clearly a secular trend toward cloud, and Amazon, being the leader in the space, continues to get what we think is more than its fair share. And so I think that the growth rate that you saw in the quarter certainly allays some of the concerns that others may have, given, to your point, the intense competitive environment that we're seeing. So, look, I think at this point the growth is strong enough that it's lifting all boats.
Ed, thanks so much for joining us here this morning on Worldwide Exchange. We'll talk to you real soon. Eddie Ruma from KeyBank.
Thanks.
Well, coming up, energy under pressure yet again amid the coronavirus outbreak. Why some investors are still making bullish calls on the sector. And the countdown is on to the big game between the Chiefs and the 49ers. CNBC's Eric Chemi is live in Miami talking to the players, including one of the NFL's most recognizable names.
Coming up next on CNBC, we're talking Gronk Beach. Check it out.
Imagine feeling fearless when you walk into the dentist. Imagine a mouthwash that strengthens your enamel while preventing cavities up to 70%. Act Anti-Cavity Rinse. For a confident feeling in your oral health, stop imagining. Start acting.
Whether you've enjoyed the legendary terrain in Telluride, the unparalleled landscape of Park City, or the famed peaks of Whistler, you face the hassle of lugging your gear through the airport. With ShipSkis, you're just a few clicks away from having your skis, snowboard, and luggage shipped from your doorstep to your destination. With unrivaled pricing, real-time tracking, ShipSkis delivers hassle-free. Ship ahead and go catch those first tracks on fresh snow. ShipSkis, your skis delivered.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen, healthier brain, better life.
What gives me confidence about investment decisions? Rigorous fundamental research, with portfolio managers focused on the long term, who look beyond the spreadsheets to understand companies, from break room to boardroom, who know the only way to get a 360 view is to go around the world to get it. Can I rely on deep research to help make quality investment decisions? With Capital Group, I can. Talk to your advisor or consultant for investment risks and information.
The world's newest ocean cruise line is yet again a world's best. Viking's elegant ships deliver a superb, inclusive experience with enriching shore excursions, alternative dining, all veranda staterooms, Wi-Fi, and much more. We're very proud to have been named a world's best 4 years in a row by Travel + Leisure readers. Learn more at vikingcruises.com.
We are less than 72 hours away from one of the biggest sporting events of the world. Before we get there, we want to bring to you the futures. We are down about 200 points here on the Dow Jones Industrial Average. The Nasdaq still holding on to a slight positive gain, I should say. And we're going to get down to CNBC's Eric Chemi. He joins us from Miami because, Eric, you've been talking to a lot of players about managing their money, their investments. What have they been telling you? Making some smart decisions down there?
That's right, Courtney. So we are here in Miami. The Super Bowl is just 2 days away. It is Friday morning right now. And what this week is, it's not just about the game. It's this business of sports, the business of celebrity. So you've got all these events from players like Rob Gronkowski. You think about him as a Super Bowl player, but also a party animal. Miami is the city that brings that together. He's got this big event coming up tomorrow called Gronk Beach. And that's just one example of many how athletes are using their celebrity to profit in other ways to fit in their brand. Obviously, if you're Gronk, you're known for being a party animal. You're known for being a fun-loving guy. So we talked to him about how do you balance that image with taking sponsor money from maybe sponsors that don't fit with your values. Here's what he said.
I've done that before, and to tell you the truth, man, it gets a little too hectic. I mean, and that's, I was young and stuff, and when you at that age, you really don't know when you're in your young 20s and stuff. You're just trying to take it in for the money, and that's not what it's all about now. You got to learn those values, got to learn those lessons, and I just want to stick to things that, I truly believe in.
And obviously, Gronkowski, he's been smart about his money. We've seen him on things like Shark Tank, where he's pitching his brother's products, that ice shaker. He's got a lot of things he's invested in. He's doing a CBD thing. So he's got a lot of brands, but he's allowed to be picky and choosy because he was smart with his money while he was a player. Here's what he said about making sure he saved most of that income.
I spent, while I was playing, but I saved the majority of my money because I knew one day it was going to end, and I wanted to be set when it was all done because I knew I could set myself up if I did it right when I was all done with football, and that's the case. But and I hosting parties, you can make a little bit there, doing some sponsorships still, but I saved the majority of my money, so things are good. You don't got to worry about that category, which is cool.
So, Courtney, when you're going around Miami this week, we're seeing more players that are not actually on the Super Bowl teams, but all these other guys like Gronk who are pitching a product or a service. That's how they make money in their retirement. Courtney, back to you.
I was just going to ask Eric, because he kind of mentioned I'm doing some endorsement deals and some parties. What does that actually mean? I mean, they're actually making money because they get paid to show up and host a party?
Right, so he's got basically a licensing deal. It's called Gronk Beach. It's his logo, it's his name, and they get sponsors like Monster Energy, STK, all these different activations around the event. People are paying hundreds of dollars for VIP access. He's there for 6 hours. So it's a way of using his brand name, and it's licensed out to an actual event company that does this with other celebrities. And they go around. Last year it was Shaq with the same company. This year it's Gronk, and they do these things around the country, for different events throughout the year, the Super Bowl just being one of those events. You're seeing players all over the place. Saquon was doing a Visa thing this week. So all these guys have something going on. So even if you're not playing in the Super Bowl, these guys are finding a way to cash in.
It does seem, too, like we've not just us at CNBC, but others have highlighted sort of the problem that has existed in the past with the players not being as smart with their money and their investments while they're playing. And it seems like maybe some of that tide is turning a little bit. At least there's a bigger awareness among the players earlier on that they need to make some of those smart decisions because it doesn't last forever. Eric, thank you so much for being here with us on CNBC this morning very early. I know you're going to have a fun, long day there today. Well, on deck, the latest on the growing coronavirus outbreak, including more companies cracking down on employee travel to China. Plus, we continue to watch the futures as the Dow's losses intensify. We're down about 178 points on the Dow Jones Industrial Average right now. The NASDAQ is slightly higher by about 9.5 points. And a reminder, you can always watch or listen to us live on the go on the CNBC app. Worldwide Exchange is back in a moment.
Between what is hoped for and what can be, there's a bridge. Between endangered and protected, there's a bridge. Between chaos and wonder, there's a bridge. There from the beginning to where we stand today. One company, one promise. If you can imagine it, we will build the bridge to get you there. Cisco, the bridge.
Take the helm and ignite your spirit of adventure with a Sunsail holiday. Relax on a skippered yacht from sunny St. Lucia to the nutmeg-scented shores of Grenada. Or take charge with a bareboat charter along Dubrovnik's glittering coastline. With up to 20% off selected destinations, now is the time to book your Sunsail adventure. Sunsail. See the world differently.
Want to kit out your new kitchen for less? Get to B&Q with 20% off all kitchen sinks, taps and appliances when you spend £2,500 on a beautifully designed and affordable good home kitchen. Hurry, offer ends 2nd of February. You can do it when you B&Q it. In-store orders only, maximum 10 appliances, excludes clearance, see DIY.com.
Inside the latest numbers from retail, cloud, and devices titan Amazon. How did holiday deals boost the bottom line? Today, 6 a.m. Eastern on Squawk Box. Watch or listen live on the CNBC app.
I quit a full-time job.
I put this together on my own.
I'm the person who made it.
Shark Tank, tonight starting at 7 Eastern. CNBC, get yours.
The quarterback is the field general. He commands the offense. Who are Wall Street's quarterbacks? In this market, it's got to be the software industry, which has been responsible for a tremendous portion of our overall gains for the past decade. Watch or listen live on the CNBC app.
Time for the executive recap. The headlines you need in 60 seconds. Shares of One Medical Parent Company is set to begin trading this morning after pricing its IPO, debuting on the NASDAQ under the ticker ONEM. The company priced its shares at $14 a piece, at the bottom of the expected $14 to $16 range. Shares of Aston Martin are surging after it was announced billionaire Lawrence Stroll is taking a stake in the company. Stroll will pay nearly $263 million for up to 20% stake in the struggling car maker. The company has been working to raise funds after a sales drop put pressure on its finances. Shares higher by 21%. And Chevron is asking its staff postpone any non-essential business travel to China amid the coronavirus outbreak. According to Reuters, the oil company is making the request as a precautionary measure. It adds that Chevron employees will need to get approval for any China travel deemed, quote, business critical. Shares of Chevron just marginally higher in the early going. And we're going to stick with energy. Investors capping off what's been a wild week for oil. Crude oil right now is higher by about 0.5%, but still below $53 a barrel. It's fallen more than $2 a barrel in yesterday's trade. Year to date, energy, though, remains the worst performing sector, down more than 8% this month and on pace to break a 2-month win streak. But that's not keeping some investors from making bold calls in the space.
But I think as long as oil is consistently above 50, there's a lot of money to be made in the marathons and in all the U.S. producers, as well as in the midstream space.
Tonight, we're going off the charts with the help of Carly Garner. She's a brilliant technician. Take a look at this chart showing historical patterns in West Texas crude. This is a seasonal chart, how oil tends to trade over the course of each year. And Garner finds that crude typically bottoms in late January, February, where we are, okay, before making a major move higher.
You can buy Conoco and EOG here down 10-15% just from where they were 3 weeks ago. I mean, those are powerful quality names in a commodity part of the market.
So what does this mean for investors as we wait results from names like Chevron and ExxonMobil due out in just a few hours from now, both of which are trading at new 52-week lows, though just marginally higher in the early going hours here. Jefferies equity analyst for integrated oil and gas, Jason Gamble. Jason, thank you for joining us here this morning. You know, energy just seems like a sector that's been left behind when almost everything else has performed well, even over the last year. In general, before we drill down on specifics, what's your outlook for 2020 for the energy sector?
Well, I think the first half of 2020 is going to continue to be fairly rough. The market is, the oil market is oversupplied. We do see that correcting in the back half of the year. And so I do think that there could be more favorable trading into the back half of the year. But we're certainly cautious and relatively defensive in the names that we choose for 2020 in general, Chevron being one of those.
Does this have anything to do with sort of the rise and refocus on ESG trading, where so many people are a little apprehensive about investing in a company that obviously focuses so much on fossil fuel production?
It's certainly playing a role, and I do cover both U.S. and European stocks. I'd say for the European stocks, ESG is an even bigger issue. But I really think that what it comes down to is in the oil price environment that we've been in, the financial results just haven't been that great. So ESG can, if nothing else, be an excuse for not owning these stocks if they're not performing financially.
And so when you're looking in the sector, and you said you are being relatively defensive, but there are some names that you like with some caution. What are some of those names?
Well, Chevron would be top of the list. Chevron is a company that is generating very strong free cash flow. That free cash flow is being returned to shareholders. The company just had a nice 8% plus increase in the dividend announced this week. It's also returning cash in the forms of buybacks. We also like BP in Europe, a company that's, we think, at an inflection point in terms of getting the balance sheet into better shape and being able to return more cash to shareholders.
What are your expectations then for some of these earnings prints that we are going to see, if you think that potentially the beginning of 2020 could still be a little bit pressured for some of these names?
Yeah, and of course we're looking back into the fourth quarter, which we know is a pretty tough quarter, in particular for refining and for chemicals. Exxon has more exposure to those two areas, so we think it could be a relatively tough quarter for Exxon. Chevron is not immune to that either. So we're not really looking at the look into 4Q as being fantastic. What's going to be more important, I think, is look forward for these companies, being able to say that they continue to lower their cost structure, continue to be very disciplined in how they deploy capital, and continue to focus on getting more cash back to the shareholders. I think that's what's going to be important for the stocks on the earnings calls today.
We talk so much about the implication for oil prices and what it tells us or what it's suggesting about global growth. And I know you're focusing more on some of the equity names, but of course the underlying price of oil is important in considering all of this. The coronavirus outbreak has been a fear of the markets and has put pressure on the commodity part of this sector. Are you at all worried about that and how it ends up flowing through to the equity names?
Yes, of course we are. And I think part of the issue is that even before we knew about the contagion, there was concerns around demand, and the market was oversupplied in the first half of the year. Now, I would say that the potential on demand is about 200,000 barrels a day or so from the coronavirus. That is something that makes the market even looser. We are getting offsets. Clearly, the output in Libya is at very low levels right now. But the market, I think, has been rightly focused on the fragility of demand recovery, and that just gets worse as a result of the coronavirus.
Jason Gamble, thank you for joining us here this morning on Worldwide Exchange. We're going to send it over to Squawk Box in just a moment. Quick check on futures before we let you go. Dow Jones Industrial Average pointing lower by 162 points. Squawk Box begins right now.
Good morning. Do not travel to China. The U.S. State Department issuing a new warning as confirmed cases of the Wuhan virus cross 10,000.
Passing the torch at IBM, Jenny Rometty is stepping down, and the head of IBM's cloud unit will take over. Stock rising on that news.
And Amazon is soaring after sales in its holiday quarter set new records, and earnings shattered analysts' expectations. It's Friday, January 31st, 2020. Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. Let's take a look at the U.S. equity futures at this hour. You're going to see some red arrows, at least for the S&P 500 and the Dow. Dow down by about 155 points, but yesterday in the pre-market trading, we were looking at the Dow down by as much as 220 points. Markets managed to rally and close higher for the day. The Dow was actually up by 124 points at the end of the session. However, this is the last trading day of January, and you do have what has been a particularly difficult start for the markets this year, the weakest start we've seen in a while for them. The Dow, the S&P 500, and the NASDAQ do remain poised to post their fifth straight month of gains, but they are barely there. They could also post a second straight weekly loss for the first time in 4 months. So we'll keep an eye on all of this today. You do see the NASDAQ outperforming. That's in part because of what we saw from Amazon, too. We'll talk more about that in just a moment. Treasury market right now. Let's take a look at the yields. Yesterday below 1.6% for the 10-year. Right now, the 10-year is still there, 1.56%. The 2-year's at 1.393%. In Asia overnight, Hong Kong's Hang Seng fell by 0.5%. Japan's Nikkei was up by 1%. We're going to talk more about the fallout from the coronavirus outbreak in just a moment.
All right, in corporate news, IBM says its longtime CEO, Ginny Rometty, is stepping down effective April 6th. Rometty has served in that role since 2012, 8 years. Arvind Krishna has been tapped as her successor. IBM says Rometty will remain executive chairman through the end of the year. The stock rising on the news, though. Here's a look at how IBM shares have performed under Rometty's tenure.
8 years, but she will have been there through that time. And during that time, we can see right there, it's down by about 23%.
It's been a saga. It really has, and it involved
massive turnaround process.
People like Warren Buffett, who probably
remember when he was in the stock.
And I've had some other people. I guess I won't go into who they, but people that all along said, look, the revenue is not rising and it's not good. But I've had other people, and I think Sonnenfeld is going to come on and make the case that it was very difficult to position IBM for the future.
She was in a difficult spot. Somebody said to me
with the cloud.
I didn't think about it initially. Someone said, "Oh, is this one of these glass cliff situations?" And I said, "I don't think so." And
glass cliff from.
They talk about sometimes when women are put in positions of companies.
An unfixable position.
An unfixable position.
What would you do with Yahoo? What would you do with
people thought that of Mary Barra. They wrote articles about Mary Barra being put in this position.
Mary Barra's done very well, though.
And she has. But what I was going to say is, at the time when she got the job, you would have never known how difficult it was because her predecessors appeared to be rock stars, and yet they really left her holding the bag.
And she the whole time was trying to get rid of what she called the empty calories revenue, the revenue that was not profitable and that was not going to be.
This isn't even trying to transition like a Microsoft for the future, which was when did that come around? 1980 or something. This is the 50s and 60s and Big Blue and John Akers, and it had to be repositioned a couple of times already. Gerstner had to come in. Palmisano had to come in and turn it around. So, I mean, to have IBM to even know what it is anymore. How about digital equipment? Anyone remember digital equipment? How about Data General? How about Prime Computer?
Yeah.
How about what was that? Novell. Remember, the biggest high flyer in the world was Novell, and they're just totally gone. So I mean, it's been tough, and there are some people that think with Whitehurst there and Red Hat, maybe it's positioned well for the future. So I don't think we can
Whitehurst,
say
by the way, is going to be president.
Yes, Whitehurst is going to be there sharing that, and Sonnenfeld said that's not the first time. Journal says that's the first time IBM has done that.
It's an interesting issue about how to measure her tenure. Right. By the way, you probably got the same emails that I did. There's so many people in the CEO community who love her. Jamie Dimon, Tim Cook. I mean, the list goes on and on and on.
I think.
We do.
She's on the
She's on the Business Roundtable board with Jamie. But, in terms of measuring her legacy, you're either going to say she kept the company alive at a time when it was a real struggle, or if you have a less generous view, she didn't do what she. But then the question is, what could have she done? So
the counterfactuals. That's hard to play out.
I mean, you really have to think you're in a position to take one of these legacy companies that has a mainframe or whatever it was. There's a lot of examples of companies that do something in the old days. They didn't become Facebook. They didn't become Google. They didn't become even Microsoft. They didn't. New companies seem to take that mantle with. Guys in their, these guys in their garages. Dell, they're in their garage, and they figure it all out. And suddenly it's even better than the previous thing. And even have IBM still around and playing in the cloud as a viable competitor, I don't know. I don't know how to measure it.
We'll talk to a lot of people today about it.
Okay. We will. Meantime, I want to tell you the U.S. now issuing a new warning, says do not travel to China. The State Department raising the alert level after the WHO declared the coronavirus outbreak a public health emergency. Joe with color commentary about
sorry,
that makes a lot of sense.
Well, true. We were arguing with that guy earlier this week about it. It was like, oh, it's okay to travel for tourism.
Not so much. Overnight, the death toll rising from the virus past now 200. The number of confirmed cases worldwide, 10,000. There are now 6 confirmed cases officially in the United States, and earlier this morning, the United Kingdom reported its first 2 cases of the virus as well. We want to get to Eunice Yoon right now, who's on the ground in Beijing with a look at what it's like living in China as the outbreak worsens. Good morning to you, Eunice.
Hi, guys. People are slowly starting to return to Beijing. I'm at the Beijing train station, and in a Chinese context, there are very few people here. The Transport Ministry said that the Lunar New Year travel for this period was down significantly. Overall trips by 16.5%. And for January 30th, the day when originally people all thought they were going to be coming back to work, travel was down 84%. This is because the government has been imposing travel restrictions as well as other measures to try to stamp out the virus. And that has been making things very, very difficult on a day-to-day basis for people here. For those of us living in China, wearing a mask is standard practice. It's not a government requirement outside of the virus epicenter of Wuhan, but nearly everyone has one on because they're fearful of catching the disease. Today was supposed to be the first day back after the Lunar New Year holiday when business would return to normal, but the government extended the holiday, so most shops and restaurants are closed. Finding fresh produce has been a challenge. I'll show you. Here, there are a few vegetables and eggs. That's not so abnormal during the holiday, but because of the outbreak, people are eating at home and hoarding, so it's a lot worse. Masks are really hard to come by. I was here the other day and managed to find 3 for $31, but now there aren't any. I've been looking for hand sanitizer for well over a week. So far, I haven't found any, and the store clerk here says that she doesn't know when there's going to be more. This is one of the entrances to my apartment complex, but more and more housing estates, office buildings, and public areas are setting up barricades and temperature checks. This is the compound where the CNBC bureau is. I have to get a temperature check here, too. So my temperature was a little bit on the low side, but still normal. But if I had a fever, he would report me to the authorities. And living here, you get a sense of just how dire the impact on the economy could be. In fact, Goldman Sachs put out some estimates where they believe that their full-year forecast for China is now going to be a 5.4% instead of 5.9%. They also see an impact on the U.S. in the first quarter, but their expectation is that the U.S. will be able to recover in the following quarter, and so the overall impact for the year in the U.S. isn't going to really be a big net drag, they said.
Eunice, I've heard a lot of different numbers that have been bandied about this morning. We're now talking about 10,000 roughly confirmed cases with the coronavirus. I've heard that there's 15,000 plus more suspected cases, but then another 100,000 people that are being monitored. You just talked about how you were being monitored with your temperature. They would have had to report you to the authorities. Where would you wind up if you had a fever and were reported to the authorities? Would you be in the 100,000 people being monitored? Would you be sent to the hospital?
Potentially in quarantine. So for it hasn't been standardized yet, but for a place like the subway, the people at the subway told us that if you were running a temperature, they would call an ambulance and have a team take you to the hospital and then quarantine you. So, but then in some other compounds, they would just turn you away. And so the procedures actually haven't been standardized yet, but it's possible that they could be, because at the end of the day, they just want to make sure that people don't go out and don't infect anybody else.
You know, we talk about the mortality rate. I think there have been 213 deaths so far from this. They estimate that the mortality rate is somewhere between 2 and 3%. That's much lower than SARS, which was closer to 10%. But if you try and compare that to the influenza, the regular strains that we see here in the United States, there's something like 15 million people who have gotten influenza here. 8,200 have died. That's a mortality rate of, I believe, 0.005%. So you are talking about much larger numbers. If it was a 3% mortality rate on 15 million people infected, you'd be talking about 450,000 people dying. That's why this is so concerning. What do the authorities say at this point about whether or when they think they might be able to ring fence this, when they can kind of get some control?
They're hoping that they get control as quickly as possible. In fact, the premier had told scientists that he was very hopeful that they would be able to really be able to find the root of the virus. It's so difficult to know, and because there are so many unknowns right now, and you put out the death rate, people have been questioning that death rate because there's been a lot of speculation that maybe there's been underreporting for some of these numbers, and so maybe the death rate isn't so accurate, and all of that is just adding to that level of fear here. Again, one of the reasons why everybody's wearing masks, because people just don't really know enough about the virus, even though, when you just look at the straight numbers of the confirmed cases versus the reported deaths, the number doesn't look as scary as, say, SARS, which is very vivid in people's memories here.
All right. Eunice, thank you. We appreciate it, and appreciate the hands-on look that you've been giving us for all of this stuff to this point. We will check in with you again very soon. In the meantime, when we come back, Amazon shattering expectations for its holiday quarter. That stock surging right now. It's up by about 9% in the pre-market. We'll dig through the report next. Plus, 3 big reports that are due before the opening bell. We'll bring you results from Caterpillar, Exxon, and Chevron, and we'll get reaction from Wall Street. Squawk Box will be right back.
Today's big number, $115.5 billion. That's how much Tesla's market cap grew to yesterday, making it 3.3 times bigger than Ford's market cap and nearly 2.5 times the size of GM's.
It's either the assurance of a 165-point certification process, or it isn't. It's either testing an array of advanced safety systems, or it isn't. It's either the peace of mind of a standard unlimited mileage warranty, or it isn't. For those who never settle, it's either Mercedes-Benz Certified Pre-Owned, or it isn't. The Mercedes-Benz Certified Pre-Owned sales event, now through March 2nd, only at your authorized Mercedes-Benz dealer.
Week of earnings, with half of the Dow and a third of the S&P set to report.
Boeing is reporting its first annual net loss since 1997.
I believe in this airplane. I believe in the engineering of it.
We've closed over half of our stores in China, and it is a very dynamic situation.
We are estimating that we're going to grow 28 to 30%.
This company's a juggernaut. iPhone beats, wearables up 44%.
It is an earnings abundanza.
Watch or listen.
Save 50% and subscribe to The Telegraph as Britain embarks on a bright new future. Treat yourself to a standard digital subscription in our Brexit sale. Pay just £25 for your first 6 months of intelligent insight and trusted opinion. Subscribe today at telegraph.co.uk.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Oh. Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Amazon, the company blowing past earnings and revenue expectations, also reporting better than expected results in its AWS cloud unit. The stock popping on those numbers, its market value hitting $1 trillion in this pre-market. We're going to be watching this very closely because right now, I think it needs to be at a $2,016 and change in order to be past $1 trillion. Obviously, you can see this morning it's well past that, trading at $2,039 right now. For more on the company's strategy, Hilding Anderson is head of retail strategy at Publicis Sapient, and Scott Mushkin, who is R5 Capital founder and chief executive officer. Gentlemen, it's good to see both of you. What's amazing about this is they are basically hitting on every cylinder. It looked like everything was performing this time around. Hilding, why don't we just start talking about the retail part of this and what they reported for holiday sales?
Yeah, I mean, obviously strong almost across the board there. I mean, you see a little bit of slowdown in AWS as expected with scale, but I think one of the really often overlooked things is how much of Amazon is actually a data-driven organization. And I think we're going to look back at the last 10 years as Amazon really highlighting and enabling data throughout their organization.
What do you mean?
Well, so we believe that organizations like Amazon are using data to look at a supply chain and do modeling in a way that most retailers just aren't doing today. And I think that's
just the supply chain, or also in terms of what they sort of recommend to you as a customer. If you bought this, we recommend this when they push things out to you.
No, and they've used that for years, right? And so what they've done now is actually use those same techniques. I mean, they built AWS to actually do that modeling, and so they're using it in every aspect, from a pricing, determining when you price an individual product, to actually anticipate where you hold inventory throughout the organization, to recommending third-party sellers what even price you should sell and how you should label a product. There are thousands of models that they've built across the organization. I think that's kind of the backstory of this high performance. The other piece I think that's very critical is the product organization, the way they've developed small teams, very different than a traditional retailer that has these sort of strong bureaucracies throughout the organization. So two of the kind of things I think are often overlooked in this very strong Q4 results.
Scott, let's just talk about the street's reaction today. You're already talking pre-market trade up 9%,
right.
Pushing it well above $1 trillion in market cap. Does that... is it deserved? Is this something that the street just missed this all the way, and it's here and it's going to run further?
We've made Amazon our top pick, and not only do we think it's deserved, we raised our price target to $2,400. I think missed in the Amazon report is just, this is like an ATM machine. They're generating so much cash. Our forecast is $26 billion in free cash flow for 2020. And that's after investing so much in CapEx. Our note title was, Next Up World Domination. So I think the challenge when you look at Amazon is how high can the equity go? We actually think they should spin off AWS.
Why?
I think there's a couple of reasons. Number one, they are losing a little business, given the connection with Amazon. I think the government scrutiny would go down.
Because Amazon competes with everybody in every industry, basically, and they don't necessarily want to go there for their cloud servicing?
But the biggest reason is retail can stand on its own. We think their retail itself would generate about $5 to $6 billion in free cash flow by 2021.
What do you think the prospects is that he actually breaks the company up? When I say he, that's Jeff Bezos.
Jeff Bezos.
Yeah.
I mean, I think he's a rational guy. He's proved himself to be shareholder friendly and rational. And I think when it looks like they're losing enough business, or the government's getting too, into their business.
Do we think the government's getting too into? I mean, are we there yet? I'm not sure we're there yet.
We're getting pretty close. When you start talking about the amount of cash this company is throwing off, I think the government's going to get interested. I mean, they already are, but I think they're going to get even more interested.
Hilding, you agree with that?
I think that to be competitive, there are significant advantages of keeping AWS as part of that accelerator for them. But I do think that the government oversight is going to be a huge challenge, especially if we continue to see some of the bad news around how they've been working with sellers and tracking those.
Gentlemen, I want to thank you both for your time. It's good to see you.
Thank you.
Thank you.
All right, coming up, the end of an era at IBM. CEO Ginny Rometty will pass the torch to the head of the cloud division. We're going to talk to analyst Stephen Milanovic about prospects for the stock from here. And then next, much more on the news that broke early this morning. The UK confirming its first 2 cases of the Wuhan coronavirus. Squawk Box coming right back.
USAA insurance for members like Martin, an Air Force veteran made of doing what's right, not what's easy. So when a hailstorm hit, USAA reached out before he could even inspect the damage.
That's how you do it right.
USAA insurance is made just the way Martin's family needs it. With hassle-free claims, he got paid before his neighbor even got started. Because doing right by our members, that's what's right. USAA. What you're made of, we're made for.
USAA. We tried 2 different real estate agents who both promised great results, but after almost a year on the market, we still hadn't sold our house. Then we found HomeLight, which promised to get us in touch with the top agents in our area. We went with the agent they recommended, and it worked. HomeLight's agent sold our house when the others couldn't.
HomeLight compares data on millions of agents, so you know you're getting the best agent for your needs.
Oh yeah, we recommend HomeLight.
Get started for free today at HomeLight.com.
When we started our business, we were paying like an arm and a leg for the postage. I remember setting up ShipStation. I think it was just like 1 or 2 clicks. Everything was up and running. I was printing out labels and saving money.
ShipStation saves us so much time. It makes it really easy and seamless. Pick an order, print everything you need, slap the label onto the box, and it's ready to go.
Our cost for shipping, like, we're cut in half, just like that.
ShipStation, the #1 choice of online sellers. Go to shipstation.com/TV and get 2 months free.
Whatever weather comes your way, WeatherTech has you covered. With our laser-measured cargo liners, no-drill mud flaps, and floor liners. To secure your phone, don't forget the cup phone. Order yours today at WeatherTech.com. You never know when it's going to be a WeatherTech day. Perfect weather today.
Ameriprise wants to know what's important to you.
Saving for Ava's college.
Being able to retire on our terms.
Taking care of Dad.
Why Ameriprise Financial?
My advisor cares about my personal goals.
He gives us comprehensive advice.
I feel prepared for what's expected in life and even what's not.
She helps us feel confident.
We know our financial future is secure.
With the right financial advice, life can be brilliant. Ameriprise Financial.
You still have service? Call the insurance company.
It's them calling us.
It's going to be a week before they can get through on these roads.
Sorry, I didn't catch that.
I said ask how soon they can be here.
Right now.
What's now?
He says they're surveying our property now.
You're probably at the wrong house.
I don't see any hovering.
His name's Hovering?
Look up.
By automating claims with machine learning and analytics, Cognizant is helping insurance companies advance how they serve even hard-to-reach customers.
Cool.
Analysis and first trading action after the latest numbers from retail and entertainment giant Amazon. Where is the company delivering for investors? Squawk on the Street today, 9 a.m. Eastern. Watch or listen live on the CNBC app.
IBM announcing that Ginny Rometty will be stepping down as CEO on April 6th. She will be succeeded by Arvind Krishna, who currently heads the company's cloud and cognitive software division. Rometty will remain executive chairman until the end of the year. Rometty became CEO of IBM back in 2012. Since then, the stock has fallen about 25%. Joining us on the Squawk Newsline to discuss what this means for the company is Stephen Milanovich, Managing Director and Tech Strategist at Wolf Research. Have you been a supporter of Ginny Rometty all along, Stephen? Was there a time when you thought that maybe she was not the right person to orchestrate the turnaround? First go back and then let us know how you feel the company's positioned for the future.
Sure, Joe. Well, we've been somewhat critical. I think all the investors know that IBM has been underperforming for some time, and we, along with others, have documented that. In fact, just a week or two ago, we put out a piece suggesting that the company required more management and perhaps structural change. We weren't sure if it was going to happen at this point, but I think it's going to be received bullishly. It's a little bit surprising that Krishna, who's coming from the R&D side, is being promoted because it appeared that the prior CFO, Martin Schroeder, was being set up to be the new CEO. But the combination of Krishna, who has been behind the Red Hat acquisition, and then, of course, Whitehurst, who comes from Red Hat, I think will be positively received by investors.
what would you have done differently, or what in hindsight, you ought to be able to figure it out, I think. I don't know if anyone would have known in 2012 how to position the company, but were there missteps, or was execution difficult, or is it just hard for a legacy company, to compete with the nimble upstarts? We've seen it again and again in tech.
That's exactly right. I think there is an uphill battle for any legacy company. Microsoft's resurgence is unique. So I think history was against IBM. That said, when she came in, she probably stuck with the prior plan a little bit too long, and then she over-marketed Watson, which is great artificial intelligence, but really wasn't quite ready for prime time. They did try to create their own cloud, but obviously have been eclipsed by Microsoft and Amazon's AWS, as we've seen in the last couple of earnings reports. The recent strategy makes more sense to me. They call it Chapter 2, which is that 80% of workloads have not moved to the public cloud, and these are the heavy enterprise applications that IBM knows. So IBM has a better shot, I think, at dealing with that from a cloud perspective. Unfortunately, when we do our checks with cloud consultants and customers, IBM just doesn't have a ton of traction yet.
So what is IBM now, and what will it be 5 years from now? Will it? I mean, it's not going to be what we thought of as IBM. They could even have a new name, I think.
Well, IBM has changed a lot over the years. Originally it was a mainframe company, right, and then very focused on hardware. Then it was more services. Today, software is about half the profit. So it's going to be a software company, and cloud and artificial intelligence will be significant parts of it. But, the world has changed, and particularly the hyperscalers with Amazon, Microsoft, and Google have really taken the lead here and left companies like IBM and Oracle in the dust. That's not to say IBM can't do better. They've got a big installed base. So, I think this should be positive for the stock over time, but it's probably not quite a Microsoft situation in terms of upside potential.
Stephen, we were talking about Ginny's legacy and how many, so much of the CEO community adores her in so many ways, and yet you look at the stock performance, and it is what it is. And not to second guess, but I'm asking you to effectively, had she gotten in that role and done something differently out of the gate? You talked about her being slow out of the gate or focusing more on Watson. Is there something in your mind she could have done that would have somehow changed the direction of this company in a more material way or in a faster way?
Well, perhaps, Andrew. I think the company was late to cloud. IBM's very smart. They saw it coming, but I think they had the traditional innovator's dilemma of concern that the cloud would undercut their core business, which to a large degree it has. So I think they were a little late in embracing cloud. And then I think they overestimated their ability with Watson and AI, and as well as their ability to create their own public cloud, not expecting probably an Amazon or Microsoft to be as successful as they've been. You could also argue maybe the structure of the company, perhaps more divestitures and repositioning the company faster, maybe making more software acquisitions before the Red Hat deal. And I think there's a big question about how much they paid for Red Hat and if that was really worth it at this time. So there clearly were some steps along the way that perhaps could have been better.
Stephen, thank you. We appreciate it's early, I know, but thanks. We'll get you to the studio next time, and you can appear in all your glory. It's not the same.
Good picture.
It's an okay picture, but it's not moving. We should get one of the
mouths to move. When we return, a lot more on Squawk Box this morning. Dow component Caterpillar expected to report just in the next couple of minutes. We'll bring you those numbers and instant reaction right here when we return.
Executive Edge is sponsored by AT&T Business with edge-to-edge intelligence covering virtually every part of your growing business. Learn more at att.com/edge-to-edge.
Through the AT&T network, edge-to-edge intelligence gives you the power to see every corner of your growing business. From finding out what's selling best, to managing your fleet. To collaborating remotely with your teams. Giving you a nice big edge over your competition. That's the power of edge-to-edge intelligence.
Interactive Brokers pays 1.06% on idle cash in your brokerage account. Do you know what your broker pays? Most U.S. brokers offer nominal interest in their brokerage accounts. Move your account to Interactive Brokers and start earning interest.
We're
We're Carvana, the company who invented car vending machines and buying a car 100% online. Now we've created a brand new way for you to sell your car. Whether it's a year old or a few years old, we want to buy your car. So go to Carvana and enter your license plate, answer a few questions, and our techno wizardry calculates your car's value and gives you a real offer in seconds. When you're ready, we'll come to you, pay you on the spot, and pick up your car. That's it. So ditch the old way of selling your car and say hello to the new way at Carvana.
It's earnings season.
The biggest companies in the world are set to report.
And we're breaking down the numbers like nobody else. It's about performance.
And opportunity.
It's earnings season.
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Where were they going without ever knowing the way? Anyone can see the road and they walk on its painted gold.
Good morning. Welcome back to Squawk Box right here on CNBC. We're live at the NASDAQ market set in Times Square. Take a look at U.S. equity futures. We're about 3 hours before the market would open, but right now it would open up about 170 points down. At least that's on the Dow there. S&P 500 looking to open down as well, off about 10 points. The NASDAQ looking to open up about 21 points.
It went down a little bit more just now, I think, on Caterpillar, although the current number looks pretty good. The adjusted current number for Caterpillar was 263, and the ESA was 237. As you can see right there, that's above the $13.1 billion in revenue compared to a 13.4 estimate. However, the guidance is for next year, 2020. Well, this year, 2020, $8.50 to $10. The street's at $10.63. So that is, $8.50 versus $10.63 would be a big miss. $10 versus $10.63, not quite as bad. But company says that continued global economic uncertainty is going to pressure sales to users in 2020, and it expects dealers to further reduce inventory in 2020. So the current quarter is okay.
Did it say anything about coronavirus or just the concerns about the...
I didn't go into the press release yet, but
just because
they got plenty.
Look, the shutdown that you're looking at in China right now, it has to have a bit of an impact. Everybody was hoping that with the trade deal here, it would mean, the spigot's open, everything's back flowing again. This has definitely put a bit of a damper on that. I
don't see anything in there.
Yeah, I don't see anything about coronavirus either.
We're pleased with the overall performance. Solid they say some positive things, but the macro environment, they continue to say the global economic uncertainty is an issue. It's kind of a generic term. It's them. Caterpillar's volatile after it reports, I can tell you that. Yeah. And it's down about 1.4%. Honeywell reported too, so
yep, we'll get you Honeywell's numbers right now. Honeywell reporting literally as we speak as well, earnings of $2.06 per share, 2 cents above estimates. However, revenue falling short of Wall Street forecasts. That stock looking like it would open up slightly higher, about almost 1% higher right now this morning.
Coming up this weekend will feature a marquee matchup between two football teams on the field, but a fierce ad spending battle between presidential candidates will be playing out during the commercial breaks. Those two. More on the giant spending numbers next. I'm not going to tell you who my pick is, although I bet. I say, I bet today so I'd have some money.
You know what? I'm going to go with my heart, which is Kansas City. Okay. I got to go with the middle of the country. I bet you go with your head and you go with the 49ers, right?
No. Everything's political with me. I want to give Nancy Pelosi a win.
I just would like to
I'm kidding. I like Kansas. I like Mahomes. He is phenomenal. He's a phenom. He's got the biggest contract ever. I don't know. I can't
you into saying it.
You did. Later, we're closing out a busy week of earnings with coverage of Amazon's big beat. Nancy could, by Sunday she may need a win in something because it's not happening elsewhere. Anyway, instant reaction from Exxon, Chevron, and more as they cross. And a reminder, you can watch or listen to us live.
Fidelity online U.S. stocks and ETFs are commission-free. And when you open a new brokerage account, your cash is automatically invested at a great rate. That's why Fidelity leads the industry in value, while our competition continues to talk.
Exploring the heart of historic Europe with Viking, you'll get closer to iconic landmarks, to local life and legendary treasures, as you sail on board our patented, award-winning Viking longships. You'll enjoy many extras, including Wi-Fi, cultural enrichment from ship to shore, and engaging excursions. Viking, voted #1 river cruise line by Condé Nast readers. Learn more at vikingcruises.com.
Apps are used everywhere except work. Why is that? Is it because people love filling out forms? Maybe they like checking with their supervisor to see how much vacation time they have. Or sending corporate their expense reports? I'll let you in on a little secret. They don't.